is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney. It's your GameStop Central. We'll get to that in a moment. Welcome, Bloomberg Surveillance. I didn't think we could top yesterday's show. We do that today in moments. Jeffrey Currie will join us here on hydrocarbons. Mr. Currie now, Carlyle Group, at a small Wall Street firm here. Previous, in the 8 o'clock hour, Andrew Sheets, Adam Posen, the Peterson Institute, Leland Miller on the challenges of China as well. This is GameStop Central. Paul, I just modeled out at 46, 47, 48. This is a 7 standard deviation move off the pre-idiocy of the last 48 hours. Has anyone explained to you why this occurs? Who lets this happen?
I was not taught this in business school. I've never seen this on the trading desk at Payne Weber back in the day. But these meme stocks, I guess it's just retail, and they're back. I don't know why they're back now in 2024. Didn't we learn our lessons from 2021?
Before we go to our introduction, we go to Lisa Mateo, meme correspondent for. Lisa, what's the talk at home now? Are the kids on the couch? Are they buying?
They're going for it. They're going crazy.
Come on, somebody explain this to me. Where's Gensler to help out? 7.2 standard deviations at 48.
Yeah, and I mean, looking at AMC Entertainment, another one of those things that's been riding it as well. So it's not just GameStop. So
it's others as well.
Yeah, so I think it's the retailers. I mean, I can understand it when we were in lockdown. Kids had the stimmy money. They were sitting at home.
Well said, yes.
But now what's driving it? I don't know.
We'll have to see. We'll have more on that. Belchunas will probably help out somewhere down the road.
He's got an ETF on that.
As well. We're on Apple CarPlay, Android Play as well, on YouTube. Subscribe to Bloomberg Podcast. That's going to be the path for the next 3, 5, 10 years. You can search Bloomberg Podcast to find us as well. I'll get out live. We got a YouTube feed there that's a live chat that's actually really quite good. We're in the Interactive Brokers Studios. And with our Bloomberg Business Flash, Lisa Mateo.
Yeah, it's all about roaring kitty, right? Okay, so let's get right to GameStop. Their shares up 55% right now. Then you look at other meme stocks like AMC up 60%. So just crazy this morning. As far as earnings, we'll start with gaming since we're in that kind of realm. Tencent reported revenue beat after its WeChat super app sparked growth in advertising and gaming. And finally, Home Depot up nearly 1%, posted 6 straight sales drop in a row. It's really struggling through that weak housing market, also lower demand for those big ticket items. Now let's get to the markets. We'll get to futures right now. Still little change, not much going on in futures right now. The bond market, we have the 2-year yield at 4.84%, down 2 basis points, and we have the 10-year yield at 4.47%, and that's down about 1 basis point. Also today, investors still looking forward to the markets for some fresh direction. We have some inflation reports to get to. Today, we have the producer price index for April. Tomorrow, we're on to the consumer price index and also retail sales. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thank you so much. A number of different ways to go here right now. Let's go a little bit obscure. We do look at equities, bonds, currencies, commodities. I want to do Home Depot in a moment. I'm sorry, yen creeps away. To people like Damian Sassower, this is a big deal. But overnight, euro yen went through 168, and we're about ready to go through 169. And it's not so much euro dynamics. Let what Macron said to Mr. Micklethwaite. The answer here is, I'm sorry, we're getting a test again of what Japan will do.
I don't know exactly. I'm looking at the dollar yen here, and the yen 156 spot 42 yen to buy a dollar here. A little bit weaker again here today. And again, remember just a couple weeks ago we pushed up on that through that 160 level on the yen here before, presumably, we've had no official confirmation that we had some intervention there on the part of the Bank of Japan.
Home Depot.
Now, why is it not?
Well, you said retail matters, and I'm sorry, retail matters, and it's soggy.
Well, Home Depot, we need John Tucker in here because he is he's the fixer-upper guy. He's the blue-collar guy.
He once got a straight 2x4 from Home Depot.
Exactly. So, I mean, there was that surge, obviously, during the pandemic, everybody kind of fixing up the home and maybe got a little bit of a hangover there, some tough comps for the Home Depots of the world here.
Come on,
but I mean, you walk into the Home Depot, I mean, they've got everything.
But you taught me how to bring up 2 screens in the Bloomberg. Thank you for that. And the answer is, I got a bank rate 30-year mortgage Right now, okay, it's down a little bit, but I'm sorry, I'm looking at 7.40%. Isn't that about 900% correlated to Home Depot?
Yeah, exactly. I mean, I am not, my mortgage on the Jersey Shore estate was at 6%. I thought I was the biggest sucker in the room at that time because everybody else had 3% mortgages, but now I feel pretty good about it. I mean, but nothing's happening on the real estate front.
Joining us now, Bruins correspondent Michael McKee. I mean, it's a look at, the cheap shot against Marchand was just too much.
Yeah. And
I'm sorry, the worst cross-check I've ever seen inside a goal net. Literally, folks, in 40 years, the worst cross-check I've ever seen into the goalie.
Yeah.
Ever.
Well, it was pretty obvious to anybody who was a Bruins fan.
For
some reason, people in Florida couldn't see it.
They couldn't see it as well. Joining us right now on this important 48 hours of inflation, Michael McKee to get us started. Mike, I understand it's important, but explain why someone like Ellen Zentner says the vector is disinflation, is when you're going to see the housing agony we feel break.
It's almost like if wishes were horses, then beggars would ride, because we've been wishing for that for a long time. A lot of people think maybe we're going to start to see it. We've seen a slowdown in home price increases. The biggest issue is rents, and do rents come down? There are various private measures that show that they have, but the BLS doesn't have a great one that predicts that it's actually going to happen. But if it does happen, that will be big news.
All right, so PPI, how should we think about producer price index? How should we look at it in terms of thinking about inflation?
Actually, that's a really good question, because you and I, a million years ago, looked at it differently than we look at it now.
Yeah, about 10, 15 years ago, they revamped the PPI, put services into it, and
they put Taylor Swift's concerts into it.
And so it has a different utility than it did. Much of it value is in gathering prices for things that go directly into the PCE index, things like portfolio management, healthcare services. The PPI is different from the CPI. The CPI measures what consumers pay, whereas the PPI measures what prices do the producers get. And there's a difference, for example, with healthcare insurance. You pay $20 copay, but the insurance company is also paying the producer, so the producer of the healthcare services is getting more than just your $20.
This plague I have, and this is the whole problem in the medical system. I had to get a bunch of antibiotics and all that. My doctor went to Boston College. She hit every single bar on Brookline Ave and Com Ave in her undergraduate years. I paid $7.37 to save myself. Yeah. Somebody, as Mike says, somebody else is paying that.
Yeah, I don't know. So all right. So as we think about inflation here, Mike, how do you think the Fed will look at PPI versus CPI? Are they like the rest of us? We just kind of care about CPI?
Yeah, I think the voting members of the Open Market Committee will probably not pay a lot of attention to PPI. Their research directors will take the numbers and plug them into their CPI forecasts and their PCE forecasts. It's interesting because this is only 1 month out of 2 this year where the PPI comes before the CPI. But once we get through both of them, you'll see a lot of forecasts come out, say Friday, of what they think the PCE will be. We don't get that number till the end of the month, but that's the number the Fed follows.
Do the Fed speakers, and you know how I feel about them, do the Fed speakers utilize what we're going to see tomorrow at 8:30?
Sure. It will inform their view of inflation, at least in a directional sense. That's why this CPI is very important, because 4 months we've had inflation start to turn around, go up a little bit, and that's not the direction the Fed or anybody else wants to see. So the thought is, by those who dig deep into this stuff, that we're going to see a slight drop in CPI on a year-over-year basis, and that would be good news.
Okay, Michael McKee, thank you so much. I promise, folks, next time we'll talk Red Sox pitching with Michael McKee. Look for him today on PPI at 8:30, and again, huge day tomorrow for Mr. McKee on CPI and retail sales at 8:30. Mixed market futures up 1. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. Donald Trump's former lawyer and fixer Michael Cohen takes the stand against him again in the former president's hush money trial in New York City. Prosecutors have been asking Cohen about the arrangements to pay for Stormy Daniels' silence about her alleged affair with Trump. After yesterday's session in New York, Trump railed against the judge and the case.
It's called politics. There's nothing illegal. A lot of people say that. They're all saying that. The only person who won't say it is the judge because it's a rigged deal. He's conflicted.
It's anticipated that Donald Trump's team is going to go after Cohen on cross-examination because he has credibility issues. Secretary of State Antony Blinken is in Kyiv this morning. He plans to highlight the battlefield gains that Ukraine could make with $61 billion in just past U.S. assistance. Polish President Duda, speaking through an interpreter, says Russia cannot be allowed to win in Ukraine.
If they manage to win in Ukraine, if they manage to accomplish their goals, they will keep on attacking. They will attack other countries. Perhaps these could be the Baltic states, perhaps this could be Finland, perhaps this could be Poland, or perhaps these could be other countries which used to be part of the Russian sphere of influence.
Polish President Duda spoke with Bloomberg News editor-in-chief John Micklethwaite at the Qatar Economic Forum in Doha. Secretary of State Blinken's visit to Ukraine comes as Russia's mounted one of the biggest attacks since the invasion more than 2 years ago in the northeastern region of Kharkiv. Ceasefire talks between Israel and Hamas have reached an impasse following the Jewish state's initial invasion of the Gazan city of Rafah. That's according to Qatari's prime minister. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
And Michael Barr, thanks so much. Lisa and Michael, I don't even chime in here if you've seen this. I saw the first episode of Ripley last night.
Yeah.
And it's like phenomenal. It's black and white. First of all, it's black and white. And on TV, black and white is a shock. I mean, you don't see it. And Andrew Scott just kills it. And it's getting huge, like Rotten Tomatoes reviews. But is anybody watching it on Netflix?
I don't know. I've downloaded it for the long train ride today. The Talented Mr. Ripley was a great movie.
Yeah.
Matt Damon and a lot of good folks in that. Philip Seymour Hoffman.
I know nothing. Lisa, help me here. Dakota Fanning comes on the moment she steps on the screen. The movie changes. She's hardly said anything. But this is a perfect example, Paul, of what we were talking about yesterday. Is the talent is looking for the numbers to see what's successful.
There's no water cooler effect.
Transparency.
There's no water cooler effect. There's no buzz about any of these shows. Nobody goes on late night television to promote it. It's a different world. I don't know how. And
I haven't
again,
even heard of it.
Exactly. And
I have to get on this train.
Thank you, Lisa, because I was going to say the same thing. What?
Go see Talented
No
Mr.
kidding.
Ripley, great movie, 20 years ago, Matt Damon, blah, blah, blah.
Yeah, that
great
I
movie,
remember, sure.
one of my faves. And now they have a little series on it. But again, it's in a world where we've got 5,000 streaming services, no promotion capabilities.
Yeah.
You don't know what's going on.
It's absolutely
We need
bizarre.
TV Guide magazines.
No,
what we need.
we do need
That's
TV Guide.
true.
But, well, we got it in Paul Sweeney, but and Lisa Mateo. But I'm telling you, I know nothing about Dakota Fanning, and she steps on the screen. And she's looking at Andrew Scott like, you sleazy.
Yep.
And we haven't seen her
Can
in
I
a while.
Can I give it
love
away?
that.
He steals the fountain pen. He's got he steals the fountain. She's looking at him like,
She knows.
She knows. Anyways, it's great. I saw Ripley, and Paul's right. There's no hype anymore in the TV shows. Futures up 2, PPI at 8:30. Bloomberg surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Yeah, Paul will be there. Visit insight.bnymellon.com. All right, going to futures right now. They are little change. A quick check of the bond market. The 2-year yield at 4.83%, down 2 basis points. The 10-year yield at 4.47%. That's down 1 basis point. To earnings, Alibaba ADRs down more than 5%. Profits sank in the last quarter, even though revenue rose. And before we go, another check-in with GameStop. They are down 85% right now. We have AMC up 76%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Joining us now, we're doing Audible here, which we can do on Bloomberg Surveillance. Jeffrey Currie joins us, professor of price theory at the University of Chicago, a small firm downtown. Great interview yesterday. John Farrow with Mr. Solomon.
Saw that, yeah.
It was like, it was like piercing. It was like
they were in Versailles.
Wherever, Currie lit Versailles with his energy knowledge.
Yep.
Jeff Currie joins us now, Energy Pathways at the Carlyle Group. He roots for the Baltimore Orioles. Jeff, copper. I got to rip up the script here. We're not doing oil, we're doing copper. 2011, 2021, 22, and now another surge way out over 3 standard deviations. What's different this time with a surging copper?
One, the investors have finally bought into the view that China is not the only game in town for copper. That's the main thing, is people finally wrap their heads around, yes, the property market in China can sink and you can still be long copper. And positioning is full force right now. And I think that if you look at what's different now, it's the willingness of the investor to embrace this market despite the fact that there's a weak property market. And that's what happened in 2021 and those other time periods that you were talking about, is people started buying into it. Then all of a sudden the property market weakened. They got too scared and pulled out of the position. I think there's a couple things that make this different. Is one, they've now seen that copper demand can rise in the face of a declining property market. It's up 6% right now in a very weak property market. But also, they've seen that the government's willing to spend infrastructure on green CapEx. So there's a lot different.
Is there a utility overlay as we see utilities surge because of electricity build out? Does copper go up with the AI enthusiasm?
Oh boy,
100%. I'd like to say, AIs, chips and copper. You need the chips, but then you need the electrical wiring to be able to power those chips. And one of those chips, the NVIDIA chips, the GPUs, consume as much power as the average American household. So you're going to need a lot of grid connection to be able to accommodate that type of growth. And, what is the bottleneck for that? It's copper. So all roads lead to copper, whether if it's military spend, AI data centers, green CapEx, they all point to copper.
You couldn't have copper in a million years. I wouldn't have guessed it. So what do I know? But so there's the demand side of the equation, Jeff. You just highlighted a number of sources of demand. Can you explain to us kind of the supply side of copper? I don't know anything about this. Where does copper come from, and how's the supply?
It's one of the last of the good old-fashioned commodities you got to dig out of the ground. Think about oil with shale manufacturing, aluminum manufacturing. You got to go out to very remotely located, geographically restricted places like Chile, Peru, the DRC, Mongolia. It's only located in a few places around the world, though in Zambia in that. And a lot of those places are incredibly difficult to get into. Then you got to dig deep. Your ore grades have come down. It can be anywhere from 12. You take, Ivanhoe's big mine in the DRC. It took 26 years to bring online. So there is a big commitment to be able to get the supply online, and you have strong demand. And everybody's been sleepwalking into this, even though they've been told about it. We started calling copper the new oil back in 2021, and it rang on deaf ears. Now it's finally people are perking up to the story, but it's going to take years to bring this.
I've been medicated, Paul. Ask one more question, and then I got to do microeconomics with Professor Currie.
All right. So while we have you, Jeff, here, talk to us about oil here. I mean, I'm looking at, I like to quote WTI crude oil. I'm an American. I love the guys down in Texas and Oklahoma and all those crazy people. $79 a barrel here. What's driving oil these days? Is it supply? Is it demand? What are you focusing on?
All the commodities are being driven by the same demand forces. It's late cycle, business cycle, in the sense that you can think of 2022 and 2023 as being your classic mid-cycle pause, where you raise rates, higher energy prices, the system slowed down. It regathered steam, consolidated around the higher rates, and now we're chugging back off into the second half of the business cycle. That's when you want to own oil and commodities. And it's about the level of demand stressing the inability to supply. That's why all of these markets are going up. The vast majority of them are in backwardation. It's all your typical, end of cycle type of bullish structure that's playing out here. And I don't see this oil being any different than copper or some of the base metals.
And now, folks, Drive Time America, early in the morning, your microeconomics segment. Jeff Currie, we just were honored to have Richard Portis, a giant of English economics in London Business School, he was kind enough to give us a story about studying under John Hicks a few years ago. I want to talk about going back to copper and to China and all the emotion. Jeff Currie, is this a shift in demand along the curve or an outright shift of the curve that has a permanence?
The outright shift in the curve is permanence. And think about how much of that's occurred since 2021. The military spent, whether if it is munitions in the U.S. to the tune of $95 billion, $100 billion in places like Germany, and then you throw in the AI data centers on top of that. That's all an outward shift in the demand curve. So, that's going to lead to structurally higher prices. And I think the question is, why will it lead to structurally higher prices? Because somebody's going to have to be crowded out here. There's not enough supply to go around to everyone. And so we're going to find out where demand destruction actually occurs.
Jeff Currie, thank you so much. That segment of Microeconomics with Bloomberg Surveillance brought to you by the George Stigler Foundation, Chicago. Jeff Currie, thank you so much with Carlyle there. And I'm sorry, folks, this is really serious stuff. We're efforting right now Ruchir Sharma of Rockefeller Foundation with his new book out, and it'll be really interesting to talk to Dr. Sharma, ex-Morgan Stanley, about this. Paul, I'm sorry, there's something going on with copper in this build-out of AI with the way the utilities have run. Did we see? I didn't see this 6 months ago.
No. And I think we started hearing about it, and Alex Steele kind of brought it to my attention. She's at a recent energy conference, and she's our energy czar. All the energy companies have been saying you can talk about AI all you want, cloud this, cloud that, data centers. Guess what? They all need energy, and they need it close by. And so that's been the play. And one of those plays, as Jeff Currie was just mentioning, is copper. You got to have those copper wires.
Well, Chris Verone yesterday on the materials. When was the last time you and I talked about the materials?
Never.
Railways to India and all that. It's like Mary Poppins from another time ago. Absolutely fascinating. Jeff Currie there, of course, formerly with Goldman Sachs and now with the Carlyle. He's ensconced in London. He's smarter than me.
Yeah, he's smart. Yeah,
you don't mind it. It's the way it goes.
Yeah, we'll get over there soon.
We're going to have Allison Williams with us later on and replay John Farrow's incredibly successful day in Paris yesterday with Mr. Moynihan and Mr. Solomon as they played court to Mr. Macron, the French in Versailles.
Bringing business to France. I saw Mr. Solomon from Goldman Sachs saying, how they've tripled their headcount, Goldman Sachs has, in Paris. And I just kept thinking back, Brexit, what were you guys thinking?
Jamie Dimon's articulate. I remember Jamie Dimon out against Brexit the evening before. He was literally doing stage shows. And what's frightening about Paris is if they ever got their tax law act together
and labor laws,
it would be an explosion. It would be a boom of unmeasurable. That's my own bias. I mean, I think people know I have a cherub there. And I hope Farrell bought her lunch, actually. That's what I would like to see. Futures 13.82. Green on the screen, we're up 2. Dow futures up 35. Is a noodle into the market, waiting for that PPI. We'll see that in 63 minutes. Michael McKee leading our coverage of PPI and into CPI and retail sales tomorrow. On YouTube, subscribe to Bloomberg Podcast. Search Bloomberg Podcast. See us there. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We're about an hour away from the Producer Price Index. Futures, still little changed right now. As we wait for that, we learned small business owners, they were a little bit more upbeat last month. The National Federation Independent Business Report's Optimism Index rose for the first time this year after dropping in March to the lowest level since 2012. So some improvement there. Over to the bond market, the 2-year yield at 4.83%, down 2 basis points. The 10-year yield at 4.48%, and that is little change. To earnings, Bayer reported profit. That was thanks to cost cutting at the pharmaceuticals division, also improving demand for new cancer and kidney drugs on top of that. And Sony, its sales outlook missed estimates on falling demand for its PlayStation 5 hardware. And yes, the meme stock frenzy continues. We have GameStop up 118%. We have AMC up 100%. That is your Bloomberg Business Flash. Tom and Paul.
Through our soundproof doors here, on the break there, I saw Lisa out in the hallway screaming at one of her cherubs, sell the damn thing.
Sell it. Take some profits here.
Folks, I've never said this in umpteen years. I don't think I've ever framed it. In finance, 4 standard deviations is pretty much a crisis move. I had the privilege of talking to a leading Wall Street CFO the Thursday of 2007 when our world blew up, and we had a 4 standard deviation move in LIBOR OIS, which is ancient history, but germane at the time. In any of the medical corridors, 6 standard deviations is sort of a human health condition, and that's where you get the Jack Welch and Six Sigma in all that. Right now, GameStop is out over 11 standard deviations, non-log, coming off of a beautiful moving average cross point at $11.80, maybe make it $12 a share. GameStop is $68 a share. When we started the show 31 minutes, 40 seconds ago, it was $48 a share. Paul, is this good?
I don't think so. No, I think it's
confidence in the financial markets.
No, I think it's just silly. It's just kind of some retail intraday trading. I mean, you would call them the day traders back.
Right
in the
now,
day.
there's somebody buying this thing at $66.94.
Yeah, I mean, I don't know if I'm the CFO. Do I go push out some stock into the marketplace, raise some capital? So it's we saw this back in the peak, I guess, in 2021. We had GameStop, AMC, some other names like that, and I think that's just they're coming back. Why they're coming back now, I don't know, but we're seeing that same kind of action.
With a hedge fund bet on a short GME, they cover their short, and that provides fuel or acceleration to the move up.
Yeah.
So it's one big short cover right now, higher stock price, but there's people like Lisa's kids. How about your son, the 19-year-old?
No, he better not be. He better not be. He better
John
be
Tucker's kid's delivering liquor out in New Jersey. I didn't know he's on the couch.
The stock closed at $30.45 yesterday, Tom. It's now up $38. So more about 125% up in pre-market trading. It closed yesterday with a market cap of $9.3 billion. So let's double that, 18, 20 billion, something like that. That's right. I mean, those are dollars and cents being traded right there.
And what's amazing about this, and it's serious stuff. I mean, you go out into western New Jersey, like they don't have electricity, the horse barns and all that.
And stuff.
The people at the barns are day trading up. They got the computer up by Gus's stall.
I know.
Day trading the meme stocks right now. Joining us right now, Catherine Greifeld on short notice here on the memes. It's just simple. Is this good? Look, we just printed $70. I'm out 11 standard deviations, and my emotion is Gensler do something. Am I wrong?
Before we start, this is on YouTube, right?
Yes.
Yeah.
I don't have any makeup on.
Oh my God!
Me in off
I
the
do?
street. You look great.
Lisa's got to deal with Dior because it's so rare.
Yeah,
but
she has people.
It's great. It's the natural Greifeld.
Yes.
This is a Greifeld we've never seen before.
Jeez Louise, if you could just turn off your camera on YouTube.
When she publishes pictures of Gus, Gus is no makeup.
Yeah,
I mean,
that's true.
I give him a good brush first.
Gus, how big is Gus? Gus is the biggest horse I've ever seen.
I got to move on. Get to the meme stocks right now. Are you
stocks.
kidding me? Where is Gary Gensler? Seriously.
It's a great question. I imagine he's in Washington somewhere. Probably also looking at the chart of GameStop because pre-market where are we? Last I checked, we were up double digits as well. Oh, great. Yeah, we're up 149%.
Yeah, sure. Why not?
So,
yes, right. No, we'll never have her on again without makeup.
Oh,
I'm
my
sorry.
God.
I'm sorry. No,
That's
I
her people
know. I
calling.
know you're her agent. We'll never have her on again without makeup.
You know, my makeup appointment, it's at 7:45 every morning.
Oh, my
so
God. I know you got in that early. Paul, help us here with Catherine Greifeld.
I don't have a makeup appointment. So what are we doing here? I mean, is this, like as Tom was saying, it just feels like, is this healthy for the market? Is it just silliness? I mean, what do the market participants think about this?
I don't know if it's healthy. I guess the question to ask is if it's unhealthy. I mean, if you're, piling into GameStop when it's up, 149% pre-market, you know what you're doing. You're gambling. Yep. And maybe that's fine.
In
that's
the back of the Art Institute in Chicago is the old wooden stock exchange room that my grandfather used to play in. It's like reminiscence of a stock operator. I mean, we're no different than under the beechwood tree, whatever it was, a million years ago. This is insane. We're at 75. It's gone up $6 since Greifeld without makeup walked in here. Okay, forget about that. We got to talk about the Olympics. You're going.
I am going.
Excited. I mean, Mr. McCraw was there.
Mm-hmm.
I would have asked, are they going to swim in the River Seine? But, what do I know? Microplate was polite.
There you go.
What do you think?
Well, about the Olympics, I think it's going to be a really interesting moment for, all the companies involved. You think about Nike planning a lot of big activations around the Olympics. That'll be interesting to see what sort of benefit it gives to the companies. And also, to Paris, have to imagine it's
Have you heard anything about, just tickets, hotels? I mean, how crazy is it? Do we know yet?
What a great question for my parents.
Okay, they're in charge. Okay.
Yeah, I'm just going along. Can I talk about meme stocks a little bit more, though?
Sure.
So John Authors had a great column yesterday, actually, and they made the point that even though we're looking at these just bananas numbers when it comes to the stock, what could be different this time around is the short interest. If you think back to 2021, 140% of GameStop shares were sold short. You look at it right now, and it's far more tame. I think it's in the 24%.
It's a massive short cover going on right now. Is that what you're saying?
Yeah, but how much juice does that have if only 24% of the shares are sold short?
Juice?
Juice?
You got to be on after 9 o'clock to say juice.
That's true. It's a little early in the morning for juice.
All right, so what do we? So it's not just GameStop; it's AMC and some other names. It's kind of that whole 2021 thing is coming back into the marketplace.
Yeah, people like stories. I think, again, you have to take it what it is, and you have to realize that the people who are doing this probably recognize that they're gambling. What is interesting is that you did also see activity in the bonds. Now, I don't think that was necessarily retail traders, trading bonds, moving from the stock market into the bond market, but maybe you have some professional traders seeing what's going on with the stock and thinking somehow this is material. It ends up being material for the actual business.
But because you're here on the meme stocks, I've got to migrate to Bitcoin. What is the update on Bitcoin? What I'm going to say is the zeitgeist bet it's 62,000.
I would also say that's a story. I have to say the storyline that I'm most interested in when it comes to crypto is the ETFs, obviously. There's a potential big regime shift coming in the investment landscape for crypto products, and that is you have the Grayscale Bitcoin Trust. It converted into an ETF with, close to above $20 billion in assets. BlackRock comes in, launches a Bitcoin ETF. They have $17 billion in assets, and Grayscale is down to $18.3 billion in assets. So Grayscale could very soon lose the crown of the world's biggest Bitcoin ETF to BlackRock.
Is it revenue making for Mr. Fink and BlackRock, or are they basically giving it away to take market share?
At this scale, I would believe that they're making money. So let's see. They have $17 billion in assets. If I was better at math, I would do it for you right now. $17 billion in assets.
If she'd gone to Bryn Mawr, it would have been different.
If I had gone to Swarthmore, I would definitely know how to do math. But they charge 21 basis points per year on $17 billion in assets. I think they're doing okay.
Okay. I'm getting tons of mail. People want more or less makeup. I mean, that's what they're saying. Catherine Greifeld, on short notice, thank you for helping us today. And seriously, folks, this meme stock, it was 75. We're now 71. Paul, what'd you say, 37 or so on the close? And we've done a double in the memes. Right now, 70 on the bid. Don't do this at home, folks. That's my basic take. What do I know?
Yeah, I say, we'll see here. I mean, the question is, if you're the company, what do you do here? I mean, you're seeing your stock get whipped around all over the place. Yeah, it's tough. I don't know if you have any real long-term investors. What do you say to them? Do you try to issue some stock at these higher levels? Is there any realistic demand there?
I don't think you got time to do it. How do you even if you only make 5 phone calls, how do you do it? I just see right now we're coming down. We're 75. We're down to 68 on GameStop. Be careful out there. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. Secretary of State Antony Blinken is in Kyiv, a trip designed to try to publicly reassure Ukraine that it has American support as it struggles to defend against increasingly intense Russian attacks. Blinken's visit comes less than a month after Congress approved the latest hefty aid package that sets aside $60 billion more for Kyiv. Blinken met with Ukrainian President Zelensky.
Thanks for coming to Ukraine, especially these days. Not simple period for Ukraine, and a tough period for the east of our country, for our warriors.
The visit comes amid a new Russian push toward Kharkiv, Ukraine's second largest city. It could happen as soon as today. President Biden is expected to hike tariffs on Chinese electric vehicles and sharply increase levies on other key industries. Details now from Bloomberg's Amy Morris in Washington.
After 2 years of reviewing Trump administration tariff policies, sources tell Bloomberg that Biden and his staff spent recent weeks finalizing the measures, including which items to hit and which to avoid. Biden is expected to quadruple tariffs on Chinese electric vehicles and target key sectors, including batteries, solar cells, steel, and aluminum. The administration did signal to the U.S. solar industry it will move to exclude some items, including machinery used to make solar panel components. The measure is expected to be unveiled at a White House event framed as a defense of American workers. In Washington, Amy Morris, Bloomberg Radio.
Donald Trump's former fixer, Michael Cohen, is set to be back on the witness stand in the former president's hush money trial today. Cohen yesterday told the jury that Trump personally approved a hush money payment to Stormy Daniels. Maryland, Nebraska, and West Virginia hold presidential primaries today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
And Michael Barr, thanks so much. Out with an incredibly thoughtful note, Vail Hartman and Ian Lingen at BMO Capital Markets.
Yeah,
and of course, Lingen with a very strong statement, just shut up and buy paper. He's like led the spread narrowing that we've seen, and we see it in a 10-year yield call for a much lower yield. And he's got one single sentence in here, Paul, I think is important. He says, you don't analyze PPI on top of CPI.
Okay.
That's a hazardous exercise to glean what we're going to see tomorrow with what we're going to see here in 45 minutes. He says, beware of that habit.
Yeah, absolutely. I mean, again, I feel like I'm just more of a CPI kind of person here. What's the consumer doing? We'll hear from Walmart on Thursday. That gives you a great read on how the consumer is doing out there. But yeah, you can go out there on the 2-year United States Treasury, Tom. 4.83%. That's not a bad place to be.
Here's a window into the Paul Sweeney world. This is so inside baseball. Talk about a jargon alert. In the 2-year space, daily stochastics are curling at mid-range.
No idea.
Lisa, help me here. What is curling at mid-range?
Repeat again?
Yeah, repeat, rinse and repeat, right? We're curling at mid-range. Thank you, Ian Lingen, for that incredible insight that daily stochastics are curling at mid-range. Seriously.
I think we buy them. That's what he's telling us.
That's some of the sophisticated. Actually, if I come back, I'm coming back as a woman's hair colorist.
Oh yeah.
Can you imagine?
There's a lot going on in the studio.
Is there anyone that you know that doesn't have their hair colored? I mean, Vet Bill's got his hair colored.
Yeah,
I mean, it's just too much.
Katie Greifeld doesn't color
natural
her
gray.
hair.
Katie, yes, next time Greifeld will be maked up. Yeah. The future's up to Bloomberg's surveillance.
breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Lisa Mateo. Futures pretty much treading water. Traders awaiting U.S. inflation reports to give the market some better direction. We'll head over to the bond market. The 2-year yield at 4.83%. That's down 2 basis points. The 10-year yield at 4.48%. And that is little change right now. Few companies making news. We'll start with Uber. They're up about 0.5%. It's buying Delivery Hero's Food Panda business in Taiwan for $950 million. It's looking to expand in the region. That's the reason for that. And Walmart, they're up about 0.1%. Sources saying cutting hundreds of corporate jobs, asking remote workers to return to the office. Walmart opens its books on Thursday. And then job site Indeed, go figure, plans to cut about 1,000 employees, about 8% of its workforce. Its second round of layoffs in 2 years. And finally, a quick check of GameStop right now, up 143%. We have AMC up 124%. That is your Bloomberg Business Flash. Tom and Paul.
Long ago and far away, he was at a bank in Little Rock, and he was day trading the meme stocks. We don't have time for this. Joining us in studio, Congressman Hill of Arkansas, who is one of the sane voices, whatever your politics in Washington. The arch matter here is Gensler do something. Is it healthy in America to have day trading of these stocks like reminiscence of a stock operator in 1923?
You know, Tom, it's good to be with you and Paul. When we had this first come up and we had Roaring Kitty at his height, I asked the question, is the bulletin board, when you subscribe to a bulletin board on Reddit and people put information out there, is that stock research? Is that a recommendation? Is that evidence of front running? And I never got an answer from the SEC on that.
Okay, I've got to turn. We got a long agenda to talk. This is a 2-hour interview. Margaret Brennan would make it 3 hours. French Hill, in Arkansas, there is the idea of tariffs of China saying we don't want your chicken, or China doesn't want Brazilian chicken. They have tariffs that discourage the import of Tyson's Food chicken, Arkansas chicken, into China. So we're going to turn around and do 100% tariff on an EV that we won't let into the country as well? You're not in a swing state. Explain this.
Boy, that's such a good question. This is so concerning to me that when we get into this across-the-board tariff approach by either the Biden or Trump administration, we recognize that we have an economy that we're deeply integrated with. China and the United States have deeply integrated economies, so to use tariff policy really backfires ultimately on both countries. I think you're much better identifying the technologies you have concerns about in foreign direct investment in China and then handle it that way.
Paul, I remember years ago at lunch where a senior officer of Tyson's Food explained to me that they figured out where they could send the dark meat, and they would send the dark meat to China. It's old news, but the answer is the congressman says, we have relationships across many commodities.
Beaks and claws.
Yeah, is that right? Okay.
Beaks and claws go to China.
Is that right?
Yes.
How big is Tyson Foods in Arkansas?
Well, it's one of our biggest corporate partners
Walmart,
because Walmart, Tyson Foods, J.B. Hunt are our three big Northwest Arkansas anchor enterprises, and they're global reach.
Yeah. It's just extraordinary. So it is an election year. What does that mean for the day-to-day workings of Congress? Do you guys have I assume you have a to-do list. How does that impact it by the fact that it's an election year and there's a lot of noise in Washington?
Well, a couple of weeks ago, Mike Johnson got to celebrate his first day as Speaker because after passing the Ukraine, Israel, and Taiwan package, the Foreign Intelligence Surveillance Act reform and reauthorization, and 24 spending, those were all things we were supposed to do in 2023.
Right.
So having cleared the decks of those, Paul, I think you'll see us move into campaign mode, which is really messaging bills to show the sharp contrast between the Biden administration and how Republicans would govern. But there are things we have to do. A farm bill. Every 5 years we authorize the agriculture programs. That's up. I expect to see that be marked up in the House Ag Committee this month. National Defense Authorization Committee, and then, of course, the most important is debating fiscal 25 spending. So those are all on the plate, even during an election year.
And, of course, we have geopolitical issues all over the world that has everyone's attention. What's your current thinking, or what's the current thinking within your house as to what's going on in the Middle East and our policy towards Israel, our policy towards that whole situation?
Well, our policy towards the Middle East, I think, has been off track as the Biden administration has really taken a page out of the Obama administration, which was to coddle Iran. And when you look at this, Iran is a partner in everything bad going on in the world today, including the invasion of Hamas from Gaza into Israel. And they're at the heart of it. And we freed up money. We freed them up from sanctions all under the Biden administration. House Republicans and a large portion of House Democrats oppose that policy. And I think it's at the heart of rearming Russia in Ukraine, partnering with China, because China buys 80 or 90% of energy from Iran, and therefore sending them money. And then they're arming the Houthis that have disrupted Red Sea trade. So at the heart of this axis, new axis of evil, I think you find Iran at every step.
Is there a politeness in Congress right now? Have things improved from the madness of 12 months ago?
Well, we have people who are performance artists in Congress, and then we have people who are there to help govern and drive the agenda and counter the Biden agenda if you're a Republican.
Yeah, but the performance artist just had a boo fest. It sounded like the British, sounded like Parliament for a way. So is there a sea change here where maybe we're getting back to a politeness?
Look, I think Republicans in Congress want Mike Johnson to continue in the speakership. He's doing a good job. And let's get through the, as you say, Paul, the national election in November. Let's focus on that. Let's have a contrast between what Republicans would do if we expanded our majority in the House, took the Senate, with or without a Biden presidency. I think that's what we should be focused on.
Okay, now we got a problem here. First of all, we got Purdue October 28th. And, you know, we got the Red White Showcase October 4th. But this year, Arkansas basketball has a different character to it as well. They're popping $7 million to the guy from Kentucky. I mean, Arkansas's playing large here. What's the impact of John Calipari coming down and changing Arkansas athletics?
Well, we're fired up to have him, and we're glad he's going to keep his shirt on. Our previous coach would always rip his shirt off when we had a victory. Didn't have enough victories, but we're glad to have him. Looking forward to him rebuilding our program. But, you know, my concern about NCAA sports is where is it going with name, image, and likeness and paying players and that they can enter the portal at any time? How do you have a relationship if you don't have a contract with people?
Do you have any understanding that the money that Calipari brings in pays for history professors or banking professors?
Well, I think we know NCAA sports that football does cover a lot of operating expenses at big universities. There's no doubt, and sports plays an important role there. But I think we're on the cusp of a really turning point in college sports when we tried to figure out, we have these huge contracts with coaches, right?
Yep.
But do we have, how do we get them the players they need to play to deliver on that contract?
Paul, Arkansas Duke, November 29th.
Ooh,
I mean, there's a road trip.
Yeah. I will
go
tune
down.
into
Congressman Hill could join us there for our play-by-play.
Yep. Yeah, that'll be a big game.
The play-by-play will be the ticket to admission.
Exactly. Congressman, talk to us about the economy in Arkansas. How are the people in Arkansas doing?
You know, the number one thing I hear when I'm at home every week is inflation and the impact on inflation on small business and families. The second thing, which you've picked up on a national basis on your show, is people are still looking for the talent they need in their workplace.
Yeah.
So this is one of those economies like we don't see very often.
Right.
And so inflation's number one, though. No, there's no doubt about that.
1 minute, you have new legislation that you're initiating. Do you have a Democrat who's lined up with that? Tell us quickly about that new legislation.
So FIT 21, this is creating a regulatory framework for digital assets. This would tell the CFTC and the SEC how to manage, regulate, and exchange digital assets out there in the marketplace. We want America to be top in innovation there. And right here in New York, Richie Torres is a great leader on designing that legislation. Jim Himes in Connecticut has been very helpful. So those are both Democrats that have worked hard on it.
Do you support ETFs for Bitcoin?
You know, I do because I think the SEC did the story, and I think the cash market in alignment with the Bitcoin market's been demonstrated. So we'll see what happens there.
Congressman Hill, thank you so much. He's a Republican from Arkansas there.
Ninth generation Arkansas.
Come visit.
That is amazing. I can't go back.
Davy Crockett used to come over for dinner.
I think I'm back in Ireland to get the ninth.
Great to be with you, Tom.
French Hill, thank you so much. We're celebrating. There's a great movie out there, Mr. Bon Jovi of New Jersey. Really can't say enough about the 40 years of Bon Jovi. We're all Bon Jovi today. Paul Demanded.
Sayreville, New Jersey.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene, Bloomberg Surveillance. Thank you for being with us with Michael Barr and Lisa Mateo. A lot going on this morning. We're watching GameStop. It's on double, like any other day. We just had French Hill out of Arkansas saying, yeah, okay, this is what it is. I thought there was some interesting chit-chat about a big short cover. Katie Greifeld was great about that. Like, you know, some people are getting hammered here betting short. They're covering so the stock explodes higher.
Yeah, exactly. Again, the stock, GameStop, just for those at home, closed at $30.45 yesterday, up $37 here today here in pre-market trading, 122%.
Home Depot, 1% numbers, a little sluggish here, trading off on that. In this hour, 29 minutes away from PPI into this huge day tomorrow, CPI and retail sales as well. Lots going on. We're going to get to Andrew Sheets here, so we're going to plow through the morning here at 8 a.m. Thank you on YouTube, out on live chat. Good morning to all of you around the world as well. Bloomberg Surveillance, we're brought to you by Cohn Resnick Advisory Assurance Tax. Cohn Resnick can help your business quantify its financial exposure using risk-based strategies and analytics. Visit CohnResnick.com. Thank you, Cohn Resnick, for your support as well. Again, on YouTube, subscribe, Bloomberg Podcast, search Bloomberg Podcast to get to us this 3-hour broadcast. With our news, with our Bloomberg Business Flash in New York City, Lisa Mateo.
You got it. We're going to shake things up. We'll start with GameStop because we've been talking so much about it. It's up 115%. You have meme stock traders continuing to pile in. Right now, we have the hikes sparking other meme stocks. We have AMC. That's higher up as well, 97%. Both stocks still, though, remain far below their 2021 peaks. To earnings, we'll go with Home Depot, up about 0.5%, posted 6 sales drop in a row. It's really struggling through the weak housing market. And then we go to Alibaba. Their ADR is down more than 4%. Profits sank the latest quarter, even as revenue rose. And finally, Tencent, they're down about, ADR's down about 1%, but it reported a revenue beat. Its WeChat super app sparked growth in advertising and also gaming. Now to futures, which are little change. We'll take you to the bond market. The 2-year yield at 4.84%, down 2 basis points. The 10-year yield at 4.48%, and that is little change. A quick check of commodities. Spot gold higher at $2,344 an ounce, and we have Brent crude at $83 a barrel. WTI crude, $78 a barrel. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. What a privilege it is, folks, to do this, where we had Jeff Currie on in the last hour with all of his heritage of microeconomics and price theory at the University of Chicago, which was, of course, somewhat the same, but still twisted and different from Brown University, with a huge heritage at Brown University of Economics. And it goes to this magnificent research note by Andrew Sheets. He is with Morgan Stanley in London, their chief cross-asset strategist. Andrew, you absolutely nail what we were talking in commodities about Jeff Currie, which is there's a time to look at macro data, and there's a time to have the courage to go micro. Explain that. Why are you going micro right now?
Yeah, thanks. Good morning. It's great to be here with you. So, 2024 is a really kind of fascinating year where I think if you read the newspaper, you look at the headlines, it does feel very macro, right? It's all about, what's the next inflation number? We're having that discussion again this week. What's the Fed going to do? What's the ECB going to do next? Where's fiscal policy going? And yet, if you look at how the markets are actually behaving, if we look at the credit markets or the equity markets, we're seeing the most uncorrelated movement in between stocks and credits, things moving independently of each other. Some of the most of that we've seen in 15 years or more. So, right. From an investor's perspective, that's an incredibly important development and has some big implications.
Then what is the macro global idea that anything that's a bill, note, or bond has a bid on it? What is the symbol, or the signal, I should say, what is the signal of price up, yield down, and fixed income?
Well, I think that you have a kind of a couple of dynamics that are going on here that's important. So I do think the first thing that's allowed this more differentiation to happen below the surface of the market, even as you have all these big macro headlines, is it does look like bond volatility has peaked. And I think as long as bond volatility is not going higher, and it's generally been kind of chopping lower, I think that's helpful. I also think you have a message from the Fed, certainly from the ECB, also from the Bank of England. Yes, there might be some uncertainty about when these central banks start cutting and how far they go, but the bar to hike is very high. And so I think investors can also draw a line under that. So I think those factors, combined with the fact that kind of higher for longer, still elevated inflation, this drives very different dynamics at the company sector level, has all been really important to allowing that differentiation to happen.
Andrew, I'm just guessing part of your job is if you're not on a plane going somewhere around the world talking to Morgan Stanley clients, you're on a phone or a Zoom call talking to clients as the chief cross-asset strategist. What's the number one call you're making today? Stocks, bonds, U.S., non-U.S., emerging markets? How's the conversation go?
So a market we like a lot is the U.S. loan market, the U.S. leveraged loan market. This represents floating rate exposure to sub-investment grade companies. But this is a market that was very unpopular at the start of the year, when I think at the start of the year, the conventional wisdom was the odds of recession were high and the Fed was going to cut a lot. And loans are a floating rate cyclical asset. So if you're worried about growth and if rates are going to fall rapidly, it's the wrong thing to hold. But I think we've seen a very different environment. I think credit to Morgan Stanley's economists. They've been in a stronger growth camp. And in an environment where growth is more resilient, where rates are coming down slower, loans offer yields of over 9%. That's an area we think is quite attractive.
We continue with Andrew Sheets of Morgan Stanley this morning from London. Bloomberg Surveillance, excuse me, brought to you by Interactive Brokers. Discover the future of trading with their next generation trading platform, IBKR Desktop. IBKR Desktop download. IBKR Desktop at ibkr.com/desktop. Paul?
Andrew, I know before your role as the chief cross-asset strategist, you spent a little time on that credit research department at Morgan Stanley, which is top-notch. Talk to us about credit quality out there. Are there areas that you're concerned about or that we should be concerned about in terms of credit quality?
So I think within credit, you kind of have an interesting dynamic where overall the picture looks good, but then with some real dispersion below the surface. So the first thing I should mention is that the largest sector in credit, which is the financial sector, looks like it's in very good health. And I think that is maybe an obvious point, but a very important one. Loan to deposit ratios are generally low versus history. Capitalization ratios are high. Excess capital looks high. And importantly, profitability has also been a lot better, especially in Europe, where profitability for a long time was very poor. So, one, I think, really important part of the credit quality story is that the financials, which are both big issuers and big buyers of credit, big issuers of credit, this is a sector that we generally think is in quite strong health. Now, I think if we look below the surface, overall corporate fundamentals look pretty reasonable. Companies, generally speaking, did not go wild during the low interest rates of 21, 22 and take leverage up significantly. And so that way, because of that, they're not getting hit as hard by yields rising and driving down interest coverage. So overall, we think fundamentals look solid. There are wrinkles around that.
Right.
Media is one sector where those fundamentals are somewhat weaker.
Andrew, one more question, if I could. We're going to help you write your June 30 mid-year review right now. What's the major theme as you get out to 6:30 and you have to write 42 pages?
Well, look, I do think this question of inflation needs to come down. I mean, I think that's the ball game. And if inflation comes down, then I think for credit for a lot of asset classes, right, I think it matters a lot less exactly when the Fed makes its first cut or how far they go. As long as you can look forward to some eventual easing, that helps. If inflation doesn't come down, then that playbook goes out the window and it injects a lot more uncertainty into the picture. But, for now, Morgan Stanley's forecast is both this week and further out, inflation will moderate.
Alan Zentner being very bold on that. We'll look for that from Ms. Zentner here as we get to Jobs Day as well. Andrew Sheets, never enough time with you. Thank you so much. With Morgan Stanley, their chief cross-asset strategist. Red and green on the screen, NASDAQ a little light, futures up to PPI in 20 minutes with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. Donald Trump's former lawyer and fixer, Michael Cohen, will be back on the witness stand later this morning in New York. Cohen has brought Trump closer than any witness yet to the alleged scheme to protect his political fortunes and obscure his role in covering up stories about an alleged affair with Stormy Daniels. Bloomberg Government's Jack Fitzpatrick reports.
Pay her $130,000 in silence, that this was not hearsay that he overheard, but that he spoke to Trump directly and was told to pay her the money and use, I guess, sign off as lawyer fees, which is a direct piece of evidence in this case.
Bloomberg Government's Jack Fitzpatrick. Secretary of State Antony Blinken made an unannounced trip to Ukraine and met with President Volodymyr Zelensky in Kyiv. Blinken's visit comes weeks after Congress approved a long-delayed aid package that provided $60 billion to Ukraine. While speaking with Zelensky, Blinken affirmed the U.S.'s commitment to supporting Ukraine.
We've traveled a long road together these past couple of years, and we've seen the extraordinary courage of the Ukrainian people. And we know that that courage endures, and that only reinforces our determination to do everything we can to help ensure your success.
State Department says Blinken and Zelensky, quote, discussed recent battlefield updates and the importance of newly arrived U.S. security assistance to helping repel Russian attacks. President Joe Biden is hiking tariffs on a wide range of Chinese imports, including semiconductors, batteries, solar cells, and critical minerals. The U.S. will also raise levies on port cranes and medical products, in addition to previously reported increases on steel, aluminum, and electric vehicles. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
And Michael Barr, thanks so much. Paul, I just got in. I got filled at 75 on GME.
Nice. Okay,
nice. I'm already down $10.
Exactly.
We're down 75 down to 65 right now. Be careful out there, folks.
Oh,
wow.
Boy. Yeah, I mean, again, I'm just looking at the chart here. It's been pretty calm over the past, couple of years after that crazy.
It's this one guy, Hello Kitty, whatever his name is.
I guess. Is that all it takes for these folks?
What are you laughing about over there?
Hello Kitty, I love it.
They didn't teach you that in CFA school, the Hello Kitty factor.
Is it? Okay,
Roaring
whatever.
Kitty.
Oh, Roaring Kitty. Oh,
Okay.
excuse me. I'm sorry. It's like, oh, you're laughing too, Ken. Great. Our global technical director's taking it in as well. Cue up the Bon Jovi when you can. I'm sorry. I mean, Paul, is this good? Come on.
It's just, to me, it's just a little corner of speculation in the market. Kids playing some games out there. But again, this stock is up 124% pre-market trading here. It was up 70%.
What's the first trade you lost money on?
Probably the first trade I ever made.
Well,
Exactly.
that was true with me. I'm there, I'm young, I'm shaving one day a week, and I'm in Westinghouse call options. That went down in flames.
Yeah. I bought Pan American Airways. I had 200,000 shares to trade for my boss, and I lost a little bit of money.
Oh, Ari's in on the chat. We have a communication chat here, folks, to help old farts like me get through the morning. Ari, thank you so much. It is Hello Kitty. Thank you, Ari. It's great to know. GameStop, $66.55. I'm amazed you can find it on the Bloomberg. I mean,
GME is the ticker. And AMC is also ripping today, another meme stock, so go figure.
They have 8,000 employees. I did not know that. Good morning, Grapevine, Texas. From New York City, Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We are less than 15 minutes away from PPI. Ahead of it, futures still much treading water at this moment. Right now, we'll head to the bond market. The 2-year yield at 4.84%. That's down 2 basis points. The 10-year yield at 4.48%. And that is little change. Few companies making news. Anglo American, and it's making a switch, exiting diamond, platinum, and coal mining in hopes to turn the company into a copper giant. You heard Jeff Currie, the Carlyle Group, talking about it here on Surveillance early this morning. If you missed it, go back to the YouTube replay and you can watch it there. Shares in London, Anglo American down 2%. Apple up 0.1% after its Vision Pro headset. It was approved for sale in China. And we'll stick with China. We'll stick to Chinese EV giant BYD, planning to unveil its Shark plug-in hybrid pickup at an event in Mexico City today. No word on a price yet for that. And checking in, of course, GameStop up 101%. We have AMC up 99%. That's your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. And Paul, I really have to admit, Anglo-American jettisoning De Beers is really emotional. That's like Heinz getting rid of Heinz ketchup.
Exactly.
There's a heritage
I know.
back there, centuries. It's really, this has been suggested by other people as these two mining companies battle. But I think for our global audience, it's somewhat understood. Our American audience, De Beers is Anglo-American soul from over a century ago. I just want to make a program note of the success of YouTube. This is a big experiment, folks. They came to me. They said, YouTube. I said, I don't watch it. The kids watch it.
The internet,
they watch it at home.
I think it's a thing.
And it's this whole new distribution, thanks to Digiday, which is teaching me every single day about this, plus all the Bloomberg stuff. And you subscribe to Bloomberg Podcasts. You search Bloomberg Podcasts. There's a live chat, which we do in real time right now. The contractors, they liked French Hill. They said he's a old school rational Republican. I guess that's a good way of describing him as well. But thank you for this nascent YouTube project that we're doing. And to get perspective, to go from the mathiness of Andrew Sheets over to Brian Levitt's very cool with Invesco.
Absolutely. Brian Levitt joins us here in studio. He's global macro strategist for Invesco. Brian, let's just start with earnings. We'll get a couple of the retailers this week. Walmart Thursday. We'll get a good read on the economy. What have you taken away from this earnings season we've just kind of gone through?
The first thing I noticed is that investors were so worried that we were going into an economic downturn or a recession. We're still growing earnings by 10%, and that's very reflective of the nominal growth environment we're in. And so the irony of everybody waiting for a rate cut, the reality is a strong nominal growth environment is probably preferable to a rate cut. And it's a bit mixed. I mean, you're seeing more coming from Tech Plus and financials than you are perhaps in energy or materials, but nonetheless, in aggregate, another strong earnings quarter.
Is it strong enough to allay those out there that may have concerns about the valuation in this market? We've had such a move off those October levels here to date. I know some folks have been concerned about valuation in this market.
The first thing I'd say is valuations are never a timing tool. So maybe you lower your long-term return expectations over valuations, but I wouldn't focus on it significantly in the short to intermediate term. The other thing is the valuation on an equal weight S&P 500 is around average, and the valuation on the S&P 500 is elevated from average. A lot of that is concentrated in a handful of names, and those handful of names have generally been delivering.
JP Morgan published last night, thanks to Carl Keene over at the Death Star for bringing it to my attention. And the bottom line is it's all 7 stocks or 8 stocks, 10 stocks, whatever. And JP Morgan modeled out 5 consecutive quarters of earnings underperformance by everyone else. How does that end? I mean, I've never said what I just said. How does this end where you got 480 stocks not getting it done like Home Depot this morning?
Typically how it ends is with an easing cycle and a normalization of the yield curve.
It's really going to be about the Fed.
It's going to be about where economic growth goes, a slowdown in economic growth. I think the question everybody's debating is, does that slowdown in economic growth give you a soft landing, or does something more ominous happen? And I'm not overly concerned given the lack of leverage in the economy, given the lack of excess. I think we will have a proverbial soft landing. Markets may retrace a little bit during or ahead of that. But then you get the yield curve normalization, the reinvigoration of economic activity, and that should lead to broader earnings throughout the index.
Okay, given that background here, any sectors that kind of screen well for you guys at the moment?
We're still in the cyclical camp now. We're still an economy.
Now, what's a cyclical? Am I buying a railroad? Is that a cyclical?
I mean, I would say the industrials, the financials.
Okay. Yep.
You still want to be more cyclical, even within tech, more cyclical. This is an economy that's doing reasonably well. As things slow, you'd want, if you're so tactical, maybe you'd want to bump up in quality a bit or be a little bit more defensive. But if you're looking over the next 2-3 years and looking out towards an easing cycle and the normalization of the yield curve, you should be thinking about a recovery that turns into an expansion. You'd want to be more cyclical in the portfolio.
I mean, Invesco, the rap was it's a bond house, and now it's much more eclectic than that. Do you guys do Bitcoin?
We do.
You do.
We do. Yeah.
Were you in that meeting? I can't imagine you. Mr. Levitt, I'm sorry, you have to travel that day. I'm fascinated what your official line is for people that missed October of last year and missed October of 2 years ago. The people that missed this bull market. What do you do?
Yeah, I mean, I always remind them that they should not be focusing on good or bad. When they focus on good or bad, they miss these things. You got to be focusing on whether things are getting better or worse. And so in the last few years, things have undeniably gotten better. The economy's been more resilient than many expected. Inflation's come down. In the short term, do you have any setup for things being a little bit worse? Yeah, maybe growth slows down a bit. But ask yourself over the next few years, where are we going to be? And look, peak inflation, peak rates, peak tightening over the next few years. To me, that's optimistic for equities, and I don't think we're 5,200 as a top on the S&P 500.
So, what do we think about? I mean, Invesco, how do you think about fixed income as an opportunity here? Because I mean, I'm happy just to sit in a 2-year Treasury at 4.8 or 4.9%. What are you telling your clients these days?
Yeah, money market and chill. Is that what you're saying?
Exactly. T-bills and chill, right? Yep.
T-bills and chill. So the challenge with that is your reinvestment risk. And if you remember back to 2019, Paul, people were begging for 4%. Yep. How are you going to get it? And you used to have to say high yield bonds, maybe lend money to the Russian government. I mean, that's how you were going to get 4%. And so today, I would prefer people be locking in, taking advantage of the yields that they can lock in, even if they're slightly below the T-bill rate, whether that's in municipal bonds, whether that's in high-quality corporate bonds, rather than live with the reinvestment risk for however long that's going to be. At some point, we're going to normalize the yield curve.
So we've got 1 minute left. We have spreads where I've never studied them. I've never seen them. Over at PGIM, Greg Peters says we're upper decile on spread narrowing right now. I mean, how does a giant aircraft carrier of bonds like Invesco deal with being in an upper decile position in corporate spreads?
If you look historically at any moment, the yield that you're getting, the yield to worst, is very much aligned with what your 5-year forward return is.
Exactly.
And whether that's at record spread, wide spreads, record tight spreads, the yield to worst.
It's 7 standard deviations on a long-term chart. It's you gotta go. You gotta believe that the full faith and credit's going to give way and spreads are going to widen, right?
Right, but you're sitting there with, call it an 8% yield in high yield, 7.5% yield in high yield. Many people have that as their long-term return expectations on U.S. equities. And so you compound that over time. You're getting that type of return with less historical risk than equities.
Yeah, there's a window into the real Invesco world, a 7.5% actuarial assumption. Good luck with that. Players. I mean, most people are modeling 5 and 6%. To make 150 beeps off that. That was just a window into the Brian Levitt world there. Folks, we got through this without any Rangers chat.
Are we nervous yet?
I am.
You're always nervous if you're
I was born nervous.
Do you think they're tough enough to do it?
I think they'll win Game 6.
Okay.
Carolina. I mean, there's a lot of Ranger fans.
Carolina. Who is a hockey team called Carolina? It's un-American. Un-Canadian. Futures up 3. Dow futures up 42. The VIX 13. 0.86. Brian Levitt, thank you. PPI now. This is Bloomberg Surveillance.
All right, coming up, we're going to check in with Adam Posen, president of the Peterson Institute for International Economics.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We're just moments away from April's Producer Price Index. Investors waiting to see if it's going to point at cost issues at U.S. manufacturers. While we wait, let's check in with GameStop. They're up 107%. We'll go to AMC up 102%. Now, as far as the markets, we're seeing little movement ahead of the Producer Price Index so far, and here it comes. So the survey for April was 0.3%. It's now at 0.5%. Tom, I'll let you do the heavy lifting.
Well, the heavy lifting is up we go with huge market move. Futures are flat now, negative 20 seconds off this. Dow futures negative 105, the VIX 13.82, the Sweeney 2-year yield. I mean, Paul, we already moved 3 basis points to the green.
Yeah.
Higher yield, 4.89% on the 2-year.
Yep, just looking at the PPI data coming across the Bloomberg terminal, Tom. PPI final demand month on month up 0.5%. The expectation was 0.3%, and that was 0.2% last period. So a big jump. Ex food, energy, trade, 0.4%. Consensus was up 0.2%.
Yeah, I'd look
so
at the year over year there. I mean, PPI ex food, ex energy, ex trade, 3.1% is a jump condition off of the prior 2.8%. Again, you see it with futures at negative 15, a demonstrable move off PPI. The 10-year real yield, that's what I watch, explodes back to 2.19%. Anything above 2.20% is angst-ridden, I would say, for the Fed. At 8:30 each and every day, our economic indicators. They're brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. We squeeze a 3-hour conversation into 8 minutes with Adam Posen, the Peterson Institute. Adam, thank you. Wonderful to catch up with you. And I've got to go to an essay off of one of my heroes, Maurice Obstfeld, writing about Trump's plan for the Fed would revive 1970s style inflation. Are we close to returning to the ugly inflation of our youth?
We may be only a year away from our youth, Tom. Joking aside, I think Maury has it right that if they talk about driving down the dollar for reasons of a trade deficit, which doesn't matter, or putting on import surcharges, all this Nixon economic policy channeling from the early 70s and making the U.S. undependable in global markets and in global institutions, that's inflationary. Maury is right, and we're going to be following that up from Peterson with other studies.
I want to get this in because Paul's got a bunch of questions. I can't say enough about what Fred Bergston invented and what Adam Posen has driven forward. Obviously, Olivier Blanchard there with all of his good work. But there's a guy that wrote a paper that was hugely influential for me decades ago. His name is William Klein, and his basic message, folks, was stop worrying about China, U.S., Japan, U.S., Australia, U.S., in that it's a diffuse system of currency movements. Off of William Klein, Adam Posen, as we angst about Japan and their depreciation or devaluation, how does it diffuse in a William Klein way across the Pacific Rim?
Well, I think what Bill Klein was saying years ago is even more true now. The dollar is dominant in reserves. The dollar is dominant for so many things. But in terms of the effect of any bilateral exchange rate on real outcomes, it's very small for anyone who's not the U.S. I mean, putting it this, sorry, I phrased that badly, but if Japan depreciates by a huge amount, which there's no particular reason it should, then it actually doesn't matter that much to the U.S. What starts causing concern is in a situation like now, where the Fed is tipped to keep hiking potentially, where U.S. growth is tipped to outperform potentially, and Europe, Japan, China, others are all go lower, then you've got an overall appreciation of the dollar, and that's a different story.
I bring this up, Paul. It's so crucial because the media is so fixated on U.S. this, U.S. that, and it's a much more complex economics than what's portrayed in the modern media. Paul?
Adam, we had this PPI data today. Adam, came in, hotter than expected, which is kind of goes to that narrative that inflation is not whipped. Inflation is still out there. How do you think about inflation in this U.S. economy these days?
Well, Paul, I've been, and you've had me on before, I've been in the camp suggesting that the inflation was going to be moving sideways on a multi-month average this year, once you got down into the low threes, and that's what's happening. 1 month's PPI, one way or the other, doesn't really tell you anything. More importantly, the Fed needs to talk about what its forecast is and what its goals are. But for people trying to assess inflation, yeah, we're stuck at around 3% inflation. I would expect headline CPI to go down a bit more in the next few months and then come back up a bit.
So given that backdrop, Adam, what do you think our Federal Reserve should do over the coming months here as we head into an election?
I think they should hold off on any rate cuts until at least November, barring something strange happening like a financial problem or a cratering of the real economy, which I find extremely unlikely. I think they should be prepared and laying the groundwork for raising rates in 2025. And I think they should be looking at and arguably talking about the fact that either they're going to change the inflation target and move it up, or if they don't want to do that, they need to explain why they're comfortable with inflation staying around where it is for a while. They can't just keep hoping that someday they'll get to change the target, but they don't have to talk about it now.
So, all right, Adam, so one of the key drivers, obviously, for the Federal Reserve is just the U.S. consumer here. We had some Home Depot results today that were a little bit weaker than expected. Of course, we'll hear from Walmart tomorrow, Thursday, after the Thursday with their earnings. How do you view the U.S. consumer here?
I mean, the U.S. consumer is continuing to be quite strong. The idea that it's tapering off some versus a year ago is not a surprise, given that real income growth hasn't been that high and that people are saving less now. So we're coming to a point at which U.S. households are probably on average not going to keep decreasing their savings rate. And so, fine. But the Fed isn't supposed to be trying to fine-tune the economy, to use an old phrase Tom will recognize. And so a little bit of slowdown in consumption is okay.
You know, I look at them posing at the real yield here, and I think we need to frame it within nominal GDP. The great miscall of the last 24 months, maybe post-stimulus, and Blanchard wrote about this brilliantly, calling the third stimulus the Biden stimulus. We've all misjudged real GDP, and certainly we've all misjudged nominal GDP with this sustained inflation that we've had. Do you have in your head where the real yield needs to migrate to assist business, to assist a beleaguered housing market? Where does the real yield need to head?
I think the real yield needs to head where it has to head, irrespective of business in the housing market, Tom, and that is flat to up. I think R-star, the neutral interest rate, is going up because we've got productivity rising, we've got risk aversion down, we've got division in the world with China, so less capital inflowing here. We've got growth prospects up, we've got fiscal discipline down.
Okay. I got to rip up the script here because we just got time. This is so important because we just had Vice Chairman Clarida in here as well, and he agrees with Adam Posen that there's a new R-star. How do you presume the messaging of the Fed teaches us that 2% is history?
So the way they're doing it for now is Powell and a couple others are starting to sort of float the idea that maybe R-star is up, and for good and bad reasons, mostly good, they claim. And they start redoing the dots every couple months, every few months, and moving up bit by bit that 10-year projection, 10-year rate projection. But I think it would be helpful for them to talk more bluntly about why R-star might be up, and if R-star is up, how far that would be. And then additionally, they then have to confront the fact that if R-star is up, then their policy isn't as tight as they think it is.
Have we ever done this before? Have we ever jawbone 2.0 gospel?
With sleight of hand in the late 90s, didn't really admit it.
Right.
So no, there hasn't been a public situation because once Bernanke comes in and starts talking transparency,
exactly,
R-star's on the way.
But Adam, is it Old Testament or New Testament? I mean, it's a gospel here, and I don't know. We've never done this before, have we, Dr. Posen?
Probably not, Dr. Keene, but the fact remains that it has to be done. If the Fed just keeps telling people that policy is close to right or tight when financial conditions are loose and R-star is rising, we're going to end up with a mistake or a huge surprise, one or the other.
Adam, thank you. Adam Posen of Peterson Institute. I can't say enough about the importance of their website. Just look, they've got a new book out with Douglas Irwin on foreign exchange. I hate Adam Posen. Talk about watching paint dry. I'll have to read the whole darn book here on foreign exchange. Maurice Obstfeld and Douglas Irwin of Dartmouth doing up a must-read for geeks from the Peterson Institute. With our news in New York City, here's Michael Barr.
Thank you very much, Tom. Paul, Lisa, the star prosecution witness in the hush money trial against Donald Trump returns to the stand this morning. We get the details from Bloomberg law host June Grasso in New York.
The Michael Cohen that jurors saw on the stand was subdued and unemotional, just answering the prosecutor's questions without any hint of his ill feelings toward Trump. His testimony is the most damaging against the former president so far, giving a first-hand account of Trump allegedly directing him to falsify financial records to cover his hush money payment to adult film star Stormy Daniels. The test will be whether Cohen can be shaken on cross-examination. In New York, June Grosso, Bloomberg Radio.
Secretary of State Antony Blinken says that American military aid on its way to Ukraine will make a real difference on the battlefield. The remarks today came as the top diplomat made an unannounced visit to reassure an ally facing a fierce new Russian offensive. Maryland, Nebraska, and West Virginia hold presidential primaries today. Meanwhile, around 6 months before the 2024 general presidential election, Attorney General Merrick Garland convened a meeting of the Election Threats Task Force yesterday. It was created by Garland and Deputy Attorney General Lisa Monaco in June of 2021. According to the DOJ, the task force has reportedly led to around 20 arrests as of March. Garland acknowledged the rising level of threats workers face heading into the 2024 race.
We're meeting today for the same reason I launched this task force 3 years ago. We have seen a dangerous increase in violent threats against public servants, the ones who administer our elections. Those threats endanger our democracy itself.
AG Garland says the public servants who administer our elections must be able to do their jobs without fearing for their safety. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Bloomberg Surveillance with Lisa Mateo. It's brought to you by Interactive Brokers. Interactive Brokers charges U.S. dollar margin loan rates from 5.83% to 6.83%, rates subject to change. Learn more at ibkr.com/compare. Lisa, we didn't get to this with newspapers, but I'm sorry. There was a sighting in Paris, and it wasn't Mr. Solomon or Mr. Moynihan or Mr. McCraw. It was Mohammed El-Arian in Rockstar Seats.
Really? At Taylor
For
Swift?
Taylor.
You're lying.
Do we have, Rich, are we scheduled El-Arian? Is he going to darken the door at some point? I think so.
We'll talk to those people.
I think we got El-Arian coming. He's got to wear the pink T-shirt he wore to see Taylor. But I mean,
They're saying she's going to pull in more money there than the Paris Olympics.
Is that right?
He's like running. Yeah, really. He's running Queen's College. So you wonder, did the king, did the royal
pull
family
a few strings there?
give him royal seats? Or
Yep.
All that.
You
We say
take
good
the
morning to
train.
Dr. O'Leary if he's listening. He often listens in England.
Yep.
But there was a sighting. It was,
Good for him.
somebody saw him in the crowd. It looked like a T-Mobile advertisement.
This is with our old buddy Stephanie Rule, I think they were.
I'll tell you about John Legere. I got a great John Legere story for you. Good morning, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures taking a little bit of a turn. We've got red on the screen after April's producer price index showed inflation remains stubborn, and that's adding to bets that the Fed will be in no rush to cut rates this year. The news comes ahead of remarks from Fed Chair Jay Powell later today, and also ahead of tomorrow's reading on consumer prices. Over to the bond market, the 2-year yield at 4.85%. That's little change. The 10-year yield at 4.49%, and that is little changed as well. To earnings we go. We'll start with Sony. Its sales outlook missed estimates, falling demand for its PlayStation 5 hardware. And Bayer up 1% in Germany. A reported profit that was thanks to cost cutting at the pharmaceuticals division and also improving demand for a new cancer and kidney drug. And I thought this was interesting. A new study finds Novo Nordisk obesity drug Wegovy. It lowered the risk of heart attacks and strokes no matter how much patients weighed. And that could spark more doctors to prescribe the medication.
What are you looking at me
for? Novo ADR's up 0.5%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Moments ago, and this is off the radar for all of you across this nation, the pros look at euro yen. It's a Western measurement, euro, away from dollar politics, versus the Japanese yen. Moments ago, it printed 169. I'm not going to waste time here. All you need to know is, once again, Japan threatened with a third intervention. And it's not just Japan. It affects China as well. Off of the middle of the 1990s, the Chinese yuan has appreciated, strengthened, over 90%, 90, over 90%. Joining us now, expert on China, Leland Miller, the China Beige Book. Leland, thank you so much. So they trot out over the weekend the first 30, 50-year infrastructure bond thing. I mean, I was literally over dinner Friday night predicting this, and then, there it is. Do they need to depreciate? Do they need to devaluate Chinese yuan?
No, they need to not devalue the yuan. And there's a bunch of reasons for this. I mean, the most obvious is political. It's a presidential year. You don't want the reaction of the United States. But if you look just at what Chinese leaders want, what they want is stability against the dollar. The yuan is soft-pegged to the dollar. The stability of the financial system is premised on stability against the dollar. What they want is smooth riding. It's very hard to do with a surging dollar, no question about it. The Japanese are having problems. The Europeans are having problems.
Right.
Everybody's having problems with a strong dollar. But they want to keep this thing stable unless they need to use it as a weapon, and we're not there yet.
So what is the Leland Miller trilemma? What is the triangle of tensions that Beijing faces?
Well, look, if you can only manage so many things, the Chinese government is premised on, we're going to control everything. We're going to control the currency. We're going to control, every aspect of the financial system. And the reality is that when you have a surging dollar, for instance, then you have to let pressure blow off in some way. And so you can either let the currency devalue, or you can allow for greater. There's several different avenues for this, but essentially what you need to do is allow pressure off the financial system in some ways. Everyone thinks they should do it through the currency, but they really don't want to do it because the stability of the system is premised on them keeping that currency rate stable.
Leland, could you give us your thoughts here on some of President Biden's most recent tariffs on Chinese goods? I'm thinking EVs and batteries and that.
Well, wait a minute, Leland, have you driven a Chinese electric vehicle?
I have not, and I've never even seen one on a U.S. road, which is what sort of stands out about this, right? It's nobody's seen them in the United States. They're amazing cars. They're not here yet, which is what makes this announcement so interesting. The cars are not here yet. This is sort of a preemptive strike saying they're not welcome here, and so you're putting 100% of tariffs on these cars, but there's 100%. On nothing that's happening right now, or at least yet.
Matt Miller, stud of the podcast Hot Pursuits.
Yep.
Auto guy says they're unbelievable. The fit and finish is really quite something.
Exactly. So, I guess more importantly, then, Leland, what do these tariff announcements mean for the U.S.-Chinese economic relationship? Where are we here? Where do you think China believes we are?
Well, from a short-term perspective, these tariffs are not going to do very much. I mean, if you look at what the most impactful potentially down the road is, we're saying that we're setting a wall around the country. No Chinese EVs are coming in. We're looking at legacy chips as a distant issue. The Chinese are not flooding the U.S. market with legacy chips right now, but the worry is that they will in 1, 2, 3 years from now. So what this is basically saying is we're setting up a wall to prevent the Chinese from exporting everything they have into our system without repercussions. And so it's sort of setting up 2025, whether it's tariffs or other measures, saying, look, this export model that she just announced, that's not going to work for us.
So I see, or we all see President Xi in Europe. Is Europe a pivot for China here? I mean, I know for Germany's of the world and France, it's always been a big export market. What can Xi really do with Europe vis-a-vis the U.S.?
Well, look, the United States decided years ago that it was going to operate outside the WTO, use things like Section 301 in order to combat what they saw as unfair market practices. Europe is sort of stuck in the WTO mold in that they haven't figured out how they can push back on China. There's not agreement to even do so. German automakers are very reliant on market share in China. The French want to go more aggressively because they're not. So there's a lot of battles within the European system on how to push back on China, which is why China's had more success getting into Europe and building things.
Off the radar, but Leland, this is what you're acclaimed for. The first time I met Leland Miller, he was looking at electric utility rates in some city I couldn't pronounce in southern China. Leland, there's a heat wave across all of Asia, across all of China right now. They're getting up to some really substantial degrees. I mean, 94 degrees Friday in Beijing is the forecast here. How does a heat wave fold into their effort to get to 5% GDP?
Well, I don't think it'll directly affect it, but it'll be interesting because people will see the electricity generation go up, and then they'll start screaming, "Hey, look, there's better growth. There must be stimulus," and so we'll have these circular arguments all the time. It's interesting when you look at things like electricity generation. They used to be one of the main inputs that a lot of people who didn't have better China data used to use. Now we realize that it's not really a tell. It's just it's noise within the system.
So, all right, let's step back here, Leela. Give us the update on kind of where you think and where the data that you guys analyze tell you where the Chinese economy is and where it's going.
Well, 2023, we started with everyone way too excited about China's prospects because we were getting out of COVID zero.
Yep.
By the middle of the year, everyone thought China was collapsing, which of course was also wrong. By the end of the year, markets sort of got around to the idea where China's not doing that great, but it's not falling apart. And I think that's where we are right now. Certain things in 2024 are better. There's no question. There's more support to property. There's been a little bit of a perk up in services earlier in the year. So 2024 is looking better than 2023. But what's important is they're not so far looking at doing any type of more significant stimulus. They're not worried about the high levels of growth. They're not worried about all these things that we used to obsess about 5 years ago. What they're worried about is building a domestic chip ecosystem. They're worried about national security priorities. They're worried about making sure China is not cut off from the U.S. payment system or the U.S. supply chains. And so they're not focused on big levels of growth, which means that this sort of current state, it's okay for them. They're okay with where things are right now.
30 seconds, I'm embarrassed it's only 30 seconds. Leland Miller, how's Hong Kong doing?
Hong Kong is sad. Hong Kong is a different place than it used to be. I lived there in the past and I love the place, but it's another Chinese city right now, and in a lot of ways a lot worse because you have a police presence, you have very draconian laws in terms of being able to express yourself. It's sort of a sad state right now.
Leland Miller, what a brief. Thank you so much. Leland Miller, China Beige Book. Again, get his literature from China Beige Book. We protect the copyright of all of our guests. PPI, what do I say? We cratered, futures down, high inflation, and we come right back in 20 minutes.
Yeah, exactly. I'm looking at the S&P, Tom, pretty much unchanged. The Dow's up about 30 points, and the NASDAQ's off about 30 points here. So not a lot of direction. Yields come in just slightly. We're still 4.48% on your 10-year, Tom.
I'm depressed. I mean, it's 41 years ago. I mean, Power Station was a studio. What an honor to attend there a couple years ago for a thing. And then Power Station's now come back. There's like a new Power Station.
Okay.
Same wood paneling and all that. 40 years ago.
Their first hit.
John, good morning.
is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Bloomberg Surveillance. After the PPI report we launch on in 24 hours, CPI and retail sales, maybe that will shake the markets. It's been quiet. There's been days like low volume and all that, but we've got a huge, eclectic debate of voices going on right now. George Bory to join in moments on this month of May. He is with Allspring. Red and green on the screen right now. What's the GameStop story? I haven't looked in the last 2 seconds.
$36, Tom. Is that good enough for you? We're up 120% pre-market trading. Going to double here today.
GME equity. Yep. There it is, 66. Boom. It was 75. It came down to 66, sure. But it was, what, 38 or something?
Yeah, crazy. But here we
Lisa,
go.
Have you traded out or,
No word yet.
Your kids are short covering this morning?
Yeah, exactly.
GameStop, your update. Thanks to Catherine Greifeld. Makeup Free
okay.
came in. Literally we took her off the horse. Did you see she takes a horse to work?
Exactly.
It's like
Gus.
Central Park. It's like Central Park South.
Yep.
She brings Gus down Lexington Avenue, ties him up in front of the chocolate store.
Yep.
They got, what do you call the thing outside the saloon? They got the thing there.
Yep. That's how we go to Lexington Avenue.
I once saw John Fair out there feeding the thing hay, giving him a bucket of hay and all that. Katie Greifeld, thank you so much for joining this morning. We're out on Apple CarPlay. We're on Android Play, on YouTube. Huge audience today. Thank you for tuning in on YouTube and the live chat. Send me in your bond questions right now for George Bory. We'll get to that in a moment. Bloomberg Surveillance brought to you by BNY Mellon. Insight, let me spell it, INSITE. BNY Mellon Insight, June 4 to June 6, Nashville. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. Thank you, BNY Mellon, for your support today. With a Bloomberg Business Flash. Lisa, GameStop Mateo.
You got it. And let's go there. Why not? Let's start with GameStop, up 119%. We have AMC. They're up 112% right there. From there, let's head over to earnings. We have Home Depot. They're down nearly 1%. A string of negative sales extended into a 6th straight quarter. We have Walmart. They're opening their books on Thursday. Alibaba, ADRs down 4%. Net income fell 86% after accounting for losses from publicly traded holdings. Its main commerce division, though, that reported modest growth. And finally, Tencent reported revenue earnings beat estimates. Its video platform gained traction against ByteDance. Now, as far as the markets, we've got little movement, and this is after April's producer price index rose more than expected. Just NASDAQ futures down about 0.2%. To the bond market, 2-year yield 4.85%. That's little change. The 10-year yield at 4.48%, and that is little change. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Okay, Global Wall Street. Right now, let's focus. George Bory's with us, Chief Investment Strategist, Bills, Notes, and Bonds, Allspring Global Investments, one of the sanest voices I know on coupon. You've got a single sentence in your note, George Bory, which is clip a coupon in May and go away. What's going to happen in May in the fixed income world?
Yeah, well, as you can see today, on the back of a pretty strong PPI print, not a whole heck of a lot. Volatility in the bond market's actually coming down.
Yeah.
Which I think, people are overlooking. And I think after several years of some very meaningful price volatility, we're seeing a little bit of stability. That to me, or that to us, suggests, that the bond market is priced for kind of this sticky 3% inflationary environment. The Fed has told us that policy is tight and will remain tight, but does it need to get tighter? We don't think so. Not yet.
In my ute, John Templeton, I was honored to attend a meeting with John Templeton, told me personally there will be a shortage of bonds. Price up right now worldwide. Is there a shortage of bonds?
So there's a shortage of high quality duration. That's a very technical term, doesn't exactly resonate with all investors, but for long-term institutional investors, those folks that need to put money to work against big liabilities, there actually is a shortage of bonds. That helps prop up or at least kind of maintain bond prices. That's number one. Number two is just valuations. You know, one of your guests earlier today talked about market timing versus kind of longer term strategies. When real yields are at these kind of levels, you are getting the sort of right kind of returns, the inflation beating returns, potential over the next 3, 5, 10, even 30 years. So as longer term investors look at this market, there's some volatility, but it's the real yield that's driving investors.
We saw Paul out on live chat. Bond, 5.35%, 6-month CD.
Yeah.
That's all that's got to be said.
Done. I mean, hey, Tom, you know where George started his career? This is a name you're going to like, Tom. Fleet Bank. Remember that?
Fleet Bank.
Up in Boston. How good were those guys?
They had religion. It's 7 a.m. You waited. And they had this young whippersnapper, Greg Anderson, and these two geniuses, Podolsky and Podarevsky. Sounded like a vaudeville show in 1910. And you waited for a single-page memo from Fleet, from Podolsky, Podarevsky, and Anderson. And it was religion for the morning.
I syndicated a lot of my loans from Chase Manhattan Bank to the good folks at Fleet. George, talk to us about where do we go here in a fixed income basis? I mean, I can sit here in a 2-year treasury. My government's going to pay me 4.85%. Do I stay there or do I take some credit risk?
So I think you picked a perfect spot on the curve. I think there's a couple things you can do in bonds. And what we like to remind investors is that bonds are a cash flow stream, right? This is not a growth instrument. You may get some price appreciation. We certainly hope you do over time. But income drives your outcomes in bonds.
Okay,
and that is the most important thing folks can remember. And if the 2 years yielding 485 and you've got a relatively short sort of investment horizon, have at it. This is a great spot to put some money to work. But for investors that need to think about longer liabilities, going back to what I said before, those higher real yields further out the curve not only allow you to match up against those liabilities, but it is that hedge against a harder economic backdrop. And while the economy is doing great today, we know that. We are kind of continue to see the same data everyone else does. Robust growth, sort of above target inflation. Tightness in the market, we think, will work over time. You want to have some duration further out the curve. And so our main message to investors is diversify that duration. Make sure your duration is aligned with what you're trying to fund. Whether it's short-term income, stick with the 2-year. If it's college expenses or house purchases, or if you're an insurance company, long-dated liabilities, well, then you are going to need to go out the curve. From that perspective, the value argument looks pretty good.
How do you invest for college expenses in a school that's $80,000 or $90,000 a year? I don't get it.
I know it's tough for
it's
a
like
lot of people.
1% of America can do that.
I know, it's ridiculous. All right, so credit. How much credit risk do I take? I mean, I look back in 2023, high yield was the best performing fixed income segment, despite all the recession talk of 2023. And they're the only ones in the green this year, high yield. So how do you think about investment grade versus high yield?
Yeah, well, we go back to that sort of notion of income drives outcomes. And so the additional income in high yield looks fairly attractive from that perspective. But as you've pointed out many times before on this show, the differential between, say, investment grade credit or high yield credit relative to treasuries fairly tight. So you're not getting a tremendous increase in yields as you move away from treasuries on into sort of corporate bonds. The question is, do you want to depart treasuries? What we like to remind investors is that there's two sides to this coin. There's corporate America, which is actually doing quite well. The earnings season's been fairly robust. Balance sheets are strong. Earnings look pretty good. As an investor, do you want to lend to corporate America or do you want to lend to the U.S. government? The U.S. government fundamentals aren't the best. We've got the full faith and credit, which stands there, but we know bonds are coming at us fast and furious for the foreseeable future.
I just figured it out. Allspring. Ann Maletti, right?
Yes, Ann Maletti.
George Borey, Ann Maletti, road trip. We have to bring Bar in Mateo. The Pabst Brewery in Milwaukee, Wisconsin.
Absolutely.
That's
Love
like a no-brainer.
I know.
I mean, done. I mean, can you get your people to work on it?
I'll make a few
can you
phone
put
calls.
an intern on this? We're doing a remote in Milwaukee with Maletti and Bori at the historic Pabst Brewery. They do weddings there.
Yeah, I get
So
married.
that's a wedding I could go to. George Bori, thank you so much with Allspring. Thinking about a Pabst beer with our news in New York City. Here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. Donald Trump's former fixer, Michael Cohen, is set to be back on the witness stand in the former president's hush money trial. Cohen yesterday told the jury that Trump personally approved a hush money payment to Stormy Daniels. Attorney Lanny Davis, who represented Michael Cohen when he pleaded guilty to committing tax and bank fraud, as well as violating campaign finance laws for Mr. Trump back in 2018, says the jury should be able to see the difference between Mr. Cohen's misdeeds and who actually benefited from it.
He didn't lie about the payment to Stormy Daniels because he had an affair with Stormy Daniels and wanted to cover it up. That was for the benefit of Donald Trump.
Meanwhile, Trump called the judge corrupt and conflicted. Secretary of State Antony Blinken is in Kyiv in an overt show of U.S. support for Ukraine after the long-delayed passage of billions of dollars in U.S. military aid. Bloomberg government's Jack Fitzpatrick has more from Washington.
This is a notable time, of course, partly because of the Russian offensive around Kharkiv, and also following up on U.S. enactment of that major foreign aid package that was delayed for many months. So trying to make a show of support for Ukraine after months and months of delays in sending further aid.
Bloomberg government's Jack Fitzpatrick. And finally, we've lost a jazz great. Grammy-winning saxophonist David Sanborn has died. He was celebrated for his decades of work that spanned jazz, blues, pop, and rock, and included collaborations with a who's who of artists, including Stevie Wonder, Eric Clapton, David Bowie, and Miles Davis. David Sanborn died at the age of 78. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thank you. Folks, and particularly for those of you younger, there is no session musician out there who changed music like David Sanborn. He was so, I mean, forget about Kenny G, and I get the fusion thing. I knew all the Spyro Gyra cats years ago coming out of Buffalo, Chuck Mangione and, Currie and all that. No single musician, Michael Barr, changed it. It was like Motown in the 50s, what David Sanborn did in the 70s.
And to the youngins, a collaboration between David Sanborn and Bob James.
Yeah.
That just blew me away. I couldn't believe it. This hit hard because this is sad.
Right. I mean, of all things, and Lisa, you won't know this band. Pure Prairie League had a 17-year-old Vince Gill, and they had a song, and David Sanborn was on the same album as Amy, which you'd never imagine in a million years. He did all. I mean, James Taylor would find anybody with talent. He was great about it, and so he's got this sax guy coming in from the Bob James world, the jazz world, to do all of the major 70s stuff, including Gorilla, which I consider his best. Michael Barr, one final thought on David Sanborn.
I think David Sanborn, and you just summed it up, probably just the smoothest. And again, nothing against Kenny G, but man, I've got his albums. In fact, pretty much all of them at home. And it wasn't until I walked in this morning that I realized he passed. And that just hurt. And he had a battle with cancer.
And from the Michael Barr world, his work with Steve Gadd, the drummer, and Joey DeFrancesco. That's all you could say. David Sanborn, a giant who changed music. Future's up 2 from New York City. We say good morning. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
The Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still little change at this moment. Over to the bond market, the 2-year yield at 4.82%. That's down 4 basis points. The 10-year yield at 4.45%, and that's down 3 basis points. Over to commodities, we have spot gold higher at $2,350 an ounce. Brent crude $82 a barrel. WTI crude $78 a barrel. Companies making news. Anglo American shares up 1% in London. They're saying they're going to exit diamond, platinum, coal mining, and hopes to turn the company into a copper giant. And Apple shares, they are a little changed. Its Vision Pro headset, that was approved for sale in China. And finally, we have to check in with GameStop right now, up 128%. We have AMC up 137%. And Tom, yesterday you were talking about Stevie Wonder's birthday. Today, there was a special birthday. Meta's Mark Zuckerberg turns 40. Business Insider said he's planning this big celebration on what many say is this new super yacht called Launchpad.
I saw
It is
that.
amazing.
I saw
We
that.
shall
What do you think?
see.
That is
You
just
saw it? It's
ridiculously
great.
big.
They haven't confirmed
yacht.
it's his, but hey.
They all have these yachts. I mean, if you make a lot of money, you got to buy a yacht.
I think
right?
so. I guess, yeah.
That's the deal.
Player, you put it in, the Caribbean in the winter, then you're
And then they're
in
so
the
rich
Med
they
or
show up
something.
like 3 days of the year, right?
Exactly. But you have to have a crew of like two dozen people.
It's like serious stuff.
So I don't know. Yeah.
Just fly your helicopter right in?
Exactly.
Maybe for his 40th anniversary, they'll change the name back to Facebook or make it Instagram.
Yes, please.
So we actually know what the hell's going on.
Meta.
Just
Meta.
possibly. I mean, what's the Instagram update right now, Lisa? I mean, to me, it's like a little bit off its allure.
It is. Well, you were right, Wes, when you talked about how they're going back to the still pictures.
Yeah,
because
still
the reels,
pictures are working.
The reels were the big thing. They were
Yeah,
even paying people for the reels, and now they
Yeah.
stopped that. So
They have? That's
yeah.
Why is that?
Well, they used to pay like about how
Right.
many like views you would
Okay.
get, and then they stopped
Yeah,
doing
that's
that.
not
okay.
working.
All right.
Yeah.
I mean, Lisa's in tune with this.
The gram.
The gram.
We're not open yet. We got the future still going. They've been all over the place. Little red and green on the screen of VIX 13.69. This is an important guest. Young Yu Ma is with BMO Wealth Management. Think Ian Lincoln and the good people of Toronto and Montreal. But he has a pedigree that is just outstanding. I mean, you can't say enough about one of the most prestigious bachelor degrees in the country out of Williams College with economics and political science, his work at Utah, and particularly a former teaching fellow at the Chinese University of Hong Kong. We're thrilled to have Young Yu Ma with us this morning. Young, I've got to go this. I know it's off the remit right now, but your thoughts on the new Hong Kong. We were just speaking with Leland Miller of the Chinese Beige Book, and he had a pretty negative tone. What are your thoughts on this new Hong Kong that we see?
Well, there have been a lot of changes. I lived there in the 1990s, actually, before the handover. And certainly there have been a lot of social changes, a lot of economic changes. I think if you talk to a lot of people there, it's a much more difficult place in both socially and economically than it used to be.
Unfair question. Will Singapore win out?
Will Singapore win out? I think Singapore for a while was drawing quite a bit of business activity, some companies relocating there. I'm not sure that trend is continuing. Yeah. I mean, Singapore is a great hub for Southeast Asia, but I still think there's more sort of direct country interest these days rather than having a regional hub.
Paul, I agree exactly on that. The first time you get on Cathay Pacific and you go south from Hong Kong and they say we're landing in 12 hours, you're like, how far Singapore is away. Why don't we get back to the remit, Paul, of Young Yu Ma?
Young Yu Ma. Williams College. Tom, they're the EIFs at Williams College.
Yeah.
I have no idea what that means, but I know they're the EIFs. It's one of my favorite kind of names for college. Young Yu, talk to us about just stepping back here. And you're at BMO Wealth Management. And you're meeting an institutional client for the first time. What's kind of your general view of the world, equities, fixed income, U.S., non-U.S.? How do you frame it out for someone who just really wants to get a sense of where you guys are looking these days?
Yeah, at a big picture, we start with the U.S. because it's the world's largest economy, and then we sort of spread out from there where it makes sense to take risk across the world. But starting with the U.S., we actually like the trajectory that we're on now. We think it's a favorable environment for risk taking. Sure, not a Goldilocks scenario where we started the year, where people were overly optimistic, maybe excessively so, about the trajectory of the Fed. But I do think still we're in a favorable place here. We have strong growth. We have strong spending in certain areas. We have a stable consumer. We have a stable labor market. And ultimately, the higher interest rates that we have, yes, they may stay higher for longer, but they're in the process of being adjusted to here. So I think we're still in a good place for risk taking.
On a daily basis, you have to put up with Brian Belsky with his optimism on the equity markets, and you got the giant Ian Lingen, who's really looking for a substantial move to lower yields. If we get an Ian Lingen world, Young Yuma, what does it mean for the equity market? If we get yields lower, what does that do to the Standard & Poor's 500?
Well, definitely, even within BMO here, there are divergence of views. So within wealth management, our house view is not that longer term yields collapse or fall substantially from here. We actually think we're right around fair value here at 4.5. This is our fair value target, and the risks are probably two-sided, but we actually see a little bit more skewness risk to the upside as to longer term yields as we approach the election. But to your question, if we get that fall in yields, it depends on what's causing that, right? If it's suddenly growth slows down sharply and that leads to falling yields, clearly that's not going to be positive, because growth is what's holding up the equity markets here and favorable for the U.S. economy and the dynamics overall. So, that's not what we think is going to happen. We think actually growth is going to hold up now, not just well. We think growth is going to accelerate in the second half of the year, and we think those longer term yields are going to be sticky here and maybe even price in some risks to the upside as we approach the election. So it depends on the drivers of those yields.
Young, last week I spent some time up in Boston with the smart folks at the Boston Consulting Group, and they were really talking about AI and how their clients, almost to a person, were asking BCG's views on AI and how they should invest and so on. How do you guys view AI? Is this something that you guys are really jumping into the deep end of the pool with in terms of looking for opportunities?
We're definitely favorable on AI developments. We think the trend is in the very early innings still. There's a lot of spending that's going to take place. And ultimately, what's going to be important is, what are the productivity gains we see out of AI? And we do think they will be strong. We're starting to see a lot of anecdotes around productivity gains, but we think that will actually show up in the data probably starting next year. So how are we investing for this? One, just being in the S&P 500 right now is so much of a growth index at this point, given the developments of the companies within the index. But there are other ways to play AI as well within infrastructure, the tech build out, not just physical infrastructure, but technology infrastructure, grid enhancements. Of course, there's a lot of news right now about the energy needs of AI. There are a lot of companies, infrastructure companies, that play into that. So we're still focused on the nuts and bolts of the economy that go into this transition and the need of what AI is going to be using in terms of resources here.
Thank you. Young Yuma, BMO Capital Markets. Greatly appreciate it. Their wealth management division, their chief investment officer. I don't know what to make of this. Joe Lavorgna's out with a smart note talking about, it is entrenched inflation when you look at PPI. Others are saying, Adam Posen said, he really doesn't follow it. I guess we go to tomorrow. We got to wait 23 hours to find out the real world.
Yeah, I mean, we're getting 4 months in a row here of, depending upon how you want to define inflation, some hotter than expected inflation data here. So to me, that's a trend. And whether it's just signifying sticky inflation or resurgent, I don't know.
Good morning, good evening, I should say. This evening in America, looking for Wednesday morning. In Japan, Euro Yen 169.12 for global Wall Street. That's an important number. For everybody else, including the Mateo household, Paul, $67 GameStop. It's cratered from 75. Exactly. And we were like at what, 35 a cup of coffee ago?
Yeah, that's volatility, that's speculation. There's got to be winners and losers on each side of those trades. So we'll see how it plays out when the market opens up.
We'll have to see. Again, thank you, Catherine Greifeld, for wisdom on GameStop as well. We need to get the markets open. Bloomberg surveillance.
hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So how will investors react after April's producer price index? It showed inflation remains stubborn. The news comes ahead of remarks from Fed Chair Jay Powell later today and also ahead of tomorrow's reading on consumer prices. Let's get things started and see how things are shaping up. Right now we have the S&P 500. That is little change. We have the Dow. That is little changed as well. And looking over to the NASDAQ right now, well, that's a little changed on top of that. So not much movement in stocks right now. We'll head over to the bond market. The 2-year yield at 4.83%. That's down 3 basis points. The 10-year yield at 4.46%, and that is down 2 basis points. Over to commodities, we have spot gold higher at $2,348 an ounce, and we have Brent crude at $82 a barrel. At the open, we'll check in with GameStop. Right now, they are up 98%. We also have news coming across the terminal. Amazon saying Adam Selipsky will step down as CEO of AWS. That is your Bloomberg opening bell report. Tom and Paul.
I'm reading the Josie comments here. This is Andrew Jassy, Adam Selipsky and Matt Garman putting out a love note from AWS on this. Adam Selipsky's out of the Harvard Combine and was doing sales marketing build out for AWS. And then when Bezos went off to sit on a big yacht somewhere, and Jassy came over to run all of Amazon, and of course Selipsky stepped in to run AWS. We'll left for Ed Ludlow. We're lucky it's 9:31 Wall Street time. Maybe he's awake right now. Yeah. And we'll see if we can get Ed Ludlow to comment on I'm sorry. I still look at it and I say Average White Band, which was a band from a million years ago. AWS, the cloud service of Amazon. We'll look for that. Lisa Mateo with that. Adam Selipsky to step down as AWS CEO to find another challenge out there somewhere. Always looking for the next challenge. Here with the Dow up 36. Julian Emanuel joins from Evercore ISI this morning. Readjust the bull call right now. 2 Octobers ago, bull market, the Yardeni move, the Ankampura move. October 5, 6, 7, 8 months ago, another bull market. Are we still in a bull market?
We are still in a bull market. So if you go back to October of 22, the entire downdraft in 2022 and really the other side in 2023, it was very valuation driven. Okay, we understand that the earnings have migrated towards, for the most part, that Select 7. But at the index level, the earnings have stayed roughly the same. The thing about 2024, which convinces us that even though we think you have a correction in front of you, is that the bull market has further legs, is you're actually going to see earnings growth for the first time in 2 years.
So what did you see in this earnings cycle that we're just kind of finishing up now? We'll get some retailers this week. It seemed pretty good to me. There's good earnings growth out there.
It was a bit odd. So basically what happened is that the surprises were much larger than expected because revisions went down prior to the start of the quarter. There isn't really an explanation other than perhaps the message of what was a subpar GDP first quarter. But you're basically on track, 5.5%, maybe 6% earnings growth. And from our view, that's good. We expect roughly that rate of growth throughout the year. But the problem for the markets is the market expects that number to be upwards of 10%.
Has the wall of money moved in to support stocks? Or with a 5% money market fund, is it yet to happen?
So for us, it has yet to happen. However, the key factor here is you've had a revision of behavior. Okay, if you can just sit there and get upwards of 5% risk-free, that's not bad. And particularly as the debate goes on and the Fed seems more and more hamstrung.
Can we rip up the script?
Please.
Rich, thanks so much for this. Plug Power, that's a Dow Jones stock, up 70%. GameStop up 113%. AMC Entertainment up 129%. This is not anathema, but the opposite of the Ed Hyman culture. Are you telling me all this meme stuff is healthy for our confidence in our financial system?
No, it's not healthy. And frankly, what it is something the Fed looks at this and this disturbs them because what it's saying is that on balance, financial conditions are probably still too loose to get inflation back to
Hyman
target.
goes back so far. He remembers when there were fruit on the buttonwood tree. I mean, he goes back that far. Who's a police officer here, Julian Emanuel?
As it probably is for the most part, your broker, and frankly,
there's no brokers. Oh, stop! There's no brokers anymore. Good morning, Commonwealth. We thank Commonwealth for their support of the show. Come on, Lisa Mateo's kids are day trading. GameStop up what 100? Come on, Paul, help me here.
It's tough out there for if you're not nimble out there on some of these names. All right, let's just broaden it out a little bit there, Julian. Small cap standouts. What's a small cap standout, and why do you like them?
So what's very interesting, and we were kidding about this before the camera turned red, is the concept of quant analysis.
Yep.
And what we found very much is that you have a shift around the concept of momentum, okay? Two things are going on. Number one, we all know because of the Mag 7 that basically small caps have been, for the most part of the last 2 years, a funding short for active managers. And, you know, the is it different this time, given the fact that the entirety of the Russell 2000 market cap is below the highest market cap in the S&P 500. And what we would say is it really isn't different this time. And frankly, what you have is a case where momentum is starting to shine. So the Russell 2000 as an index peaked, believe it or not, in 2021. But there's a lot of stocks that have made new highs since then whose earnings are moving in the right way. Those are the names we want to own, putting a toehold into our view that long-term small cap is likely to have a sustained multi-year period of outperformance ahead of it.
What's a momentum miser? Page 40 of your deck.
There we go. So essentially the opposite of what I just described.
I see you laughing at me. Sweeney actually reads the decks. I don't.
There we go.
There we go. Well, 80 pages, the clients tire by like page 60 or so.
What's that Hyman truck? Yeah. What's a momentum miser?
They are stocks that have not made new highs since this latest bull market cycle and have downward earnings revisions. And it's all a matter of expectations. And if expectations are coming down, those are the kind of stocks you want to under-own. Sell, short, that type of thing.
What does Ed Hyman say about materials? Copper. I mean, you know, Ed Hyman remembers when Anaconda Copper was the Nvidia of the day. Are we back to materials?
I think that's a more mixed view, right? So
Fair,
the question is this a result of, you know, a supply drag over the course of years? There's certainly an element to that. Is it a result of the fact that the rest of the world seems to be stabilizing economically, perhaps more than we thought? There's an element to that. We don't see this sort of whoosh-type reacceleration that justifies this increase in prices. But then there's also the idea that assets are moving to hedge an inflation that appears to be more persistent than perhaps we thought 6 months ago.
So what do we do here? And how do we think about valuation here? Because we've had such a move off those October levels, you know, 25% in the S&P and more in some other indexes. Earnings are good, but I'm not sure they're that good. Are we pushing the envelope on valuation here?
We are pushing the envelope on valuation, which is why for us, we think the indexes move a little lower in the near term.
Julian, thank you. Let's do it again. This is too short a visit. Julian Emanuel with his Evercore ISI. Jumana Bertecci is leading our coverage at the Qatar Economic Forum in conversation with our Eric Shasker. Ken Griffin.
And the Sovereign Wealth Fund are very important. And I think it's more important to have your money entrusted with a firm that is going to act continuously in your best interest as an investor than it is to try to pick somebody who simply has the lowest fees or some other superficial demarcation of being open and transparent. I mean, let's be clear. Your money managers who have really important intellectual property aren't going to be unduly transparent. They're trying to protect their very intellectual property that they'll share the benefits with the client. Simply put, Coca-Cola doesn't publish its recipe on the web. So I think it's very important when you find a money manager, you're really asking, what's their competitive advantage? What's their culture? How aligned are they with me? And in both in the good moments and the bad moments, are they going to put themselves in the shoes of their clients and make the right decision by their clients? You know, at Citadel, I take great pride that almost over 20% of the capital in our hedge funds is the capital, the partners, and the team members at Citadel. We wake up every single day as co-investors with our capital providers. And I think that symbolizes what I would think about looking for if I were a member of the sovereign wealth community here in the Middle East.
One last thing. Among the many distinctive qualities that Citadel is...
Just by the way, when you're going to go pick a brain surgeon, do you find the doctor with the lowest fee?
That's not what I would do, no.
Right? So you want to find somebody who actually has pricing power because other people perceive them to be good.
It says something, yes.
There's something to be said for that.
I was just going to say, because I think it would certainly interest people in this room and elsewhere in this part of the world, one of the things that Citadel is known for is how seriously you and your colleagues take the search for extraordinary talent. A number of investment firms have opened offices in this part of the world, whether it's in Doha, whether it's in Abu Dhabi, in Dubai, for example, or Riyadh. Have you thought about expanding here?
Well, we actually just recently did an analysis of our competitors' footprints in a number of these cities as we try to think about what is our strategy here in the Middle East. And you landed on the right issue. It's about talent. And when we think about our Middle East strategy, we're going to think about where are we going to draw the greatest amount of talent, both from the domestic country and from the international community. Too often, countries try to attract talent by having very attractive tax attributes. That tends to draw in a handful of senior PMs, but doesn't draw in the analysts and the associates who do the day-to-day work that's required to be successful in the markets. You know, one of the reasons that I think Citadel has been so successful is the intense collaboration that we have within our four walls. A PM working side by side with an analyst, with an associate, working through a problem. Having a PM located in a low-tax jurisdiction on Zoom intermittently with a team back in London, that's not a winning formula. So when we think about where we're going to be in the Middle East in terms of our footprint for human capital, it's going to be about a holistic solution where we've got people who are in the region integrated tightly with PMs who are here. The whole team is here and successful as a team.
It explains a lot. Ken, thank you very much. Ladies and gentlemen, please join me in thanking Ken Griffin.
Eric Schatzker with Ken Griffin of Citadel. Thanks to Jemana Berteschi and Mr. Schatzker for the Qatar Economic Forum, going on there with a lot of good voices of a Middle East, which is front and center, not only with oil dynamics, but the political seasons of the Western world and China as well. Paul, Dow up 85 points. I mean, forget about the meme stocks don't lift the Dow. Let's start with that.
Yeah, I don't think they do. I don't think they're very representative, but we've got a little bit of lift of the market. Tom got the Dow, again, up 80 points, as you mentioned, up 0.2%. About the same for NASDAQ. The S&P's up about 0.1%. Yields come in just slightly, Tom, off about 2.5 basis points on your 10-year, 4.46. Right. And on the 2-year, remember, you were almost getting paid 5% there a week or so ago. We're down to 4.82% on your 2-year.
Somebody says 6-month CD, 5.35%, which is jaw-dropping. To say the least. We got a lot more coming up. We're working now off the AWS announcement, Amazon, with the changing of the guard at their most successful cloud computing shop. We'll see if we do that here in the next 15 minutes. Dow up 77 points, of VIX 13.80. Looking at that 10-year real yield, 2.14%. From New York City, good morning, Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Finally, a little bit of a lift to the market after April's PPI came in hotter than expected. We have the Nasdaq up 0.2%, the Dow and the S&P 500 up 0.1%. The 2-year yield at 4.82%, that's down 3 basis points. The 10-year yield at 4.46%, and that's down 2 basis points. Checking in with GameStop up 62%. AMC shares are up 72%. Also want to look at Home Depot. Their shares are a little changed, but it reported another sales drop. It's really been struggling through that weak housing market. Amazon shares, they are down about 0.5%. The company named Matt Garman is CEO of AWS. He'll be replacing Adam Selipsky. And more news from Novo Nordisk. Stick with me here, Tom. Bloomberg reporting Novo planning a study. One of the goals being whether its weight loss drugs can help people drink less alcohol. That is your Bloomberg Business Flash. Over to you, Tom.
Thank you so much. Every exit of a fancy CEO is different. Jassy with a classic note. It's like 8 paragraphs long. It's like, we are the world, love and kisses and all that. Adam Selipsky, and the way you read these notes, folks, is you start at the bottom and read up. That's usually the most effective way. Single sentence. Adam is now going to move on to his next challenge, parentheses, after taking a well-deserved respite. The king of well-deserved respites, Anurag Rana, joins us now in a hotel room somewhere in Middle America. Anurag, thank you for the spirit of getting on with this. Where do you think Adam Selipsky will go? Does he go to the arch rival Google or dare I say Microsoft? Or is there someone new and cloudy out there that Adam Selipsky would look comfortable at?
I would be very surprised at both those options, only because, Adams, he used to be at AWS, then he became the CEO of Tableau, which was then acquired by Salesforce. And, when Andy became the CEO of Amazon, he was brought back to run AWS at that point. And it seems from the memo today, he kind of did a favor to them in terms of, a few years of hanging out here. But, from our side, it's not going to disrupt anything that's happening in AWS. Andy's still running the company. And this new gentleman, Matt Garman, it looks like he's very focused on sales and marketing, global services. So, we anticipate a lot more focus on legacy enterprises and cloud migrations,
right?
From him.
And Paul, the swirl of this is really cool because like in June, there's that one day in June where Anurag puts on a black turtleneck and shows up at Apple to see what Tim Cook's doing and all that. But I'm sorry, there's a fervor right now in the cloud area, the AI area.
Oh boy.
All these people are in massive demand.
They are. So and that's exactly right. And Anurag, give us the lay of the land, as Tom was just suggesting here, of the cloud environment these days. We've got the big players, Microsoft, Amazon, Google. Give us kind of just the lay of the land competitively.
Yeah, so when you look at it, AWS still runs the table. They have the largest market share. Their revenue run rate is up to 100 billion at this point. But again, you look at a company that size, the growth rate is slowing down to 15, 16%, but which is not shabby from any, mathematical unit. Then you have Microsoft, which is really, gaining market share lately because of its OpenAI relationship. So you use more OpenAI, Microsoft makes more money at the back end. So those are the two things. And then Google's, the third player trying to catch up and saying, we have the best AI related services. Why don't you come to us and host your product? So this is really the three people that everybody cares about.
One of our great themes, Anurag, yesterday as well, great show yesterday, and today's been very strong, is copper. It's like The Graduate, plastics, except it's copper.
Yep.
Anurag, from your view as tech guy, how do you look at the utility surge and the copper surge to generate electricity? Is that certain? Is that a guess? Where are we 3 years from now with copper?
Yeah, so when you look at power needs, I think this is going to be the next big bottleneck after GPUs for any AI-related workload. Normally, I wouldn't listen to experts about any of that stuff, but during the Berkshire meeting, we heard that they are seeing some really big surge in power demand. So I think it's coming from every sources, not just the tech people, but people who run energy companies. So I think that's going to be the second big bottleneck now, which means after some time we may see some slowdown in terms of the rate of innovation in AI.
So, Anurag, we're still very, very early innings of AI, and I guess we're all trying to get a handle on it. But from a tech spending perspective, do we have a sense of how much of this AI spending, which everybody's talking about, how much of that is new tech spending, or how much of that is just taken away from other areas like IT or, I don't know, PCs or whatever?
Yeah, so for 2024, it is transfer of funds. So we have, this year, a lot of consulting companies, you can look up Accenture, for example, or IBM Consulting, their growth rates have just plummeted. And a lot of that is because at the expense of people shifting budgets. The good question is going to be for us to figure out is 2025, are we going to get a net addition, or it's going to be still the same theme? So I think this is the biggest question for everybody, because when you look at certain other areas in technology, we are seeing a slowdown.
What are we going to see from Apple at this June meeting Sweeney's going to?
Oh, yeah.
Oh, but it's going to be so complicated. I can't even figure out how to look at the Venn diagrams in this particular case, because it seems they're going to have something from OpenAI. We are still waiting if they're going to license even Google's model. But it seems to me, for Apple's sake, frankly, if they are not able to showcase a lot of good developments here, it's going to be another bad year for them in terms of iPhone growth. So it's for their advantage, sign up a deal with OpenAI, sign up a deal with Google, and then come out and, show good features. Hopefully we can sell some iPhones then.
Anurag with a Ritz-Carlton somewhere in the Midwest. Thank you so much. Anurag Rana with us on the road as we look at AWS and a changing of the guard. Okay, my head's spinning, Paul.
Yep.
We're at 18. We close at 30. We do a double yesterday in GameStop. We had a pre-market of 75. It opened at 64, and we're now down 15 points at 50. So I guess we're stopped trading on GameStop. We've gone 30-something up to 50, which is a pretty good day pay.
It is, and it's the exchanges are having a hard time keeping up with all this stuff. So we get halts every couple of minutes. It opens back up.
Is that a regulated halt, or is that like the machines don't work halt?
No, I think that's a regulated halt. I'm sure it's due to some volatility and some volume triggers here. But we see it pop up on the Bloomberg terminal on the screen as trading halted, and then it opened back up for a few minutes, and you see a bunch of stock trade hands, and then it gets overwhelmed again. Right. So we've seen that before back in 2021 when we had kind of the height of some of this meme stock trading. But it's not just that. I'm looking at AMC Entertainment, another one of the names that the traders like to jump into. That's up 78% to $9.25. We've got halted trading on AMC as well. So there you go. Have some fun with that.
My head's spinning again.
I don't know who's doing it.
To review here, folks, we go to tomorrow in CPI and retail sales. I mean, essentially, it's been one big churn for 3-4 days.
Yeah,
and then we get to a denouement tomorrow, as the artsy people would say.
Yeah, the PPI print was certainly above expectations, Tom. But the market's kind of taking it in stride a little bit here. Yeah. So I, for me at least, when I talk to the Michael McKee's of the world, the question is this renewed inflation we've seen here in 2024? Is it just sticky inflation, or is it a resurgence? Do we need to worry about this?
We're on Apple CarPlay. We're on Android Play as well. Thank you out on YouTube. Had a huge day on our growing audience on YouTube. You subscribe to Bloomberg Podcasts out at YouTube, and you can go to YouTube, search Bloomberg Podcasts, and it'll get us there. We do a 2-hour, 56-minute uncut replay of the show. You see that 11 a.m. noonish as well. I've got single best idea out there with some voices. Not sure who we're picking today, but it's interesting to say the least. We had a huge response to Michael Barr's work on David Sanborn today, the death of David Sanborn. We'll feature his music tomorrow. Off of yesterday, Sweeney had a tantrum. Don't play Bruce, play John.
Yeah.
So this is later. There's early and there's middle. There's later John Bon Jovi.
Yep. Okay. Yeah.
They were like huge. They go into the studio with Michael Brower, the giant of mixing, and they make this wall of sound. And it was like the reincarnation of early John Bon Jovi. They really captured the energy of the lads from New Jersey. This is our house. John Bon Jovi. We'll see you tomorrow. This has been great.